GetCrack. Wake up, motherfucker.
Fall is here and winter is coming, and you need to shop Lowe's Customs. For the ladies, there's stunning designs and colors. For the men, Lowe can make something manly to keep your insecurities in check. But wait, there's more. For you simps, there's a special Simp Edition, where Lowe will roll around in it, blow smoke from the finest Southern Eastern American marijuana. She'll even rub her pretty feet all over it just for you. So what are you waiting for? Shop Lowe's Customs now, exclusively on the John Galt Urban Landlord channel. Let Lowe help you stay cozy and warm this season. Shop Lowe's Customs today.
Is the smartest port in the world. It's located 60 kilometers away from downtown Tianjin, a coastal metropolis southeast of Beijing. China operates more than 34 major ports and 2,000 minor ports across the country. But there's something unusual about this port. On the surface, it looks like any other shipping harbor, filled with cranes and containers. But here's the catch. It's very rare to find employees working on the ground. Instead, this terminal is fully automated using 5G, cloud computing, AI, and robots to operate the entire workflow. This is Terminal C of the Tianjin port, and this is the story of how China built the world's first smart, zero-carbon shipping terminal. China is the manufacturing hub of the world, with over 70% of countries now counting China as its top trading partner. But 3 years of zero COVID has disrupted supply chains and led to a labor shortage in the port industry. But China has a plan to turn things around. According to this article from Bloomberg, China is investing in future technologies like robots and AI to reduce labor needs, improve safety, and create a more sustainable port operation that will become a model for the world to follow. Yang Jiemin, the vice president of the Tianjin Port Group, stated, all ports globally should move toward being more intelligent, eco-friendly, and efficient. So how did China do it? Well, it starts with an investment in technology. Huawei is one of China's leading tech companies, but has come under intense pressure from US sanctions in recent years. But despite these sanctions, Huawei is pivoting to new industries, and this project in Tianjin has become a new priority for Huawei, who is now seeking to tap into a global smart port market expected to reach $11.5 billion by 2030. Let's first explain why smart ports are needed. This Bloomberg article from last month shows one of the biggest problems currently facing the industry. Labor disruptions at world ports quadruple as discontent grows. Finding reliable workers is a problem for seemingly every industry after COVID. Shipping hubs from Europe to Asia experience major staffing problems as unions battled growing inflation and stagnant wages. Even the US was not exempt from these problems. When the worst of the pandemic hit, several California ports started operating 24/7, but it still didn't solve the problem because there simply wasn't enough workers. Let's take a closer look at the port in Tianjin. Currently, the port operates a fleet of 76 fully automated driverless vehicles. If the port operated 24/7, each truck would require 3 shifts and 3 drivers, resulting in a workforce of at least 228 drivers alone. At traditional ports, all equipment in every vehicle require a driver, but the Tianjin port has been operated since October 2021 without a single driver. This has saved the port millions in labor costs, but also provides other huge benefits. In doing my research for today's video, I was shocked to learn that most ports around the world still rely on manual scheduling. This requires hours of manual planning instead of having an AI computer plan out the entire operation in just a few minutes. And here's a stat that will absolutely blow your mind. With Huawei's intelligent planning, the capacity of a single vessel is shortened from 20 hours of manual planning to 10 minutes of intelligent planning. When you consider that Tianjin port processes more than 21 million cargo containers a year, ranking it within the top 10 busiest ports in the world, it's easy to see how much time and money this port is saving by operating as a smart port. Another advantage in building smart ports is the reduction of errors and increase of safety. A traditional port has over 800 workers, with most of them on the ground loading and unloading containers and moving them around the facility like a giant Tetris puzzle. Most accidents at traditional ports are the result of human error. But remember, the Tianjin smart port doesn't have a single person on the ground. Loading and unloading containers? That's done with robots and machines. Moving containers from point A to point B? This is done through 5G-powered automated automated vehicles. By removing human drivers from the equation, the Tianjin port has become one of the smartest and safest ports in the world. It also greatly reduces the need for human staff. Smart ports require only 25% of the human workforce of a traditional port, and most of these employees are located in air conditioning offices and simply manage the entire port's operation through their computer screens. By embracing technology and improving logistics, the automated system of the Tianjin port can process up to 36 containers per hour compared to only 28 containers per hour at a conventional terminal. Once again, with the Tianjin port processing more than 21 million cargo containers a year, this is a substantial increase in port efficiency. Overall, the Tianjin port has been a great case study for China, as the terminal has been in full operation for the past 16 months. This port is the first in the world to combine 5G and level 4 autonomous driving together in a large-scale commercial operation, and now the Tianjin port is ready to export its successful model across the globe. Just last month, the Tianjin Port Group, along with Huawei, announced that they will continue their cooperation and build a digital twin of this exact Tianjin port. The hope here is that this new project will be a model for upgrading and transforming existing terminals worldwide. Once again, Yang Jieming, the VP of the Tianjin Port Group, shared his insights in a recent press conference. These innovations being used at the port of Tianjin are having a huge impact on the port industry, creating new value for ports by improving operating environments, driving green and low carbon development, and increasing operational efficiency. We believe that these practices will promote the intelligent development of the global port industry. As we all know, ports remain an integral part of our global supply chain, and the Tianjin Smart Port has proven to be an excellent case study of automation for the world to follow. This is one of the primary reasons that I closely follow the technology coming from China and run a dedicated YouTube channel focusing on China. I truly believe that China is inventing technologies that have the power to change the future of our world. Currently, the US and China are locked in an intense battle and experiencing some of the highest tensions in decades. But I'm going to end today's video revealing to you the most important stat you need to remember. Despite everything you hear in our media, the US-China relationship is a lot healthier than most people think. Imports and exports of goods between our two countries hit $690 billion last.
All right, guys, you enjoyed that CCP advertisement? I mean, honestly, those guys that are striking in the ports, yeah, they get their wage increases, right? They won that part of it. But can they win the automation battle? That's another game. Yeah, if you're going to ship that many containers and we're going to have so many consumers around the world, it's going to be tough. Gonna be tough. China. That's right, China. That's right, guys. What's up, 12th man? What's up, Garen? All right, so now that we're done with all the drama with the ports, let's see what we have here. Let me do a little quick market update for you guys. So this week was inconclusive, very inconclusive. So we had the port drama start on the first day of the new quarter of trading, October 1st on Tuesday, right? So we dropped, did nothing for a while. We came back up. We're done. So a week of nothing, blah. You look at the SPY here, same thing, nothing. We're near the top still. Now, we're done with Jewish New Year's, Rosh Hashanah. It ended yesterday, sundown. So let's see what's true and not true. Next week, we will only have inflation data around, I believe, Thursday. No, not. Yeah, it is inflation data. I think Thursday and Friday. It's usually Wednesday. I don't know. I think it usually comes out Wednesday, but so next week it'll be Thursday and Friday. So anyway, let me zoom in the chart here. So yeah, nothing went down here. QQQ, nothing went down. What was interesting though is lithium, uranium. Very interesting stuff is happening there. I like it. I like what I'm seeing. So let's look at that. PLL. Damn. You see that? Oh, that is nice. So the first move up here was mostly due to China and Jerome Powell. And then the second certain moves came from, I think they won some DOE
approval that they can start mining in, I think, North Carolina. I think it's North Carolina. So there seems to be a lot of stuff happening in North Carolina right now. You got that story about the silicon. They needed the quartz, right? That started getting traction again. And then now with the new mining, you kind of wonder if this is a conspiracy. You know, I don't want to get into conspiracy on this this channel here. Okay, we can save that for the the other stream. Yes, Garion, you should be happy living in North Carolina. Maybe you should buy some more properties, you know, because now with the flooding and all the landslides and stuff, I think a lot of land got cleared out. I wonder if those mudslides and things got cleared out around the areas that they're gonna mine in. Sounds conspiracy to me. All right, so let's dive into it. I think I'll come back to the lithium stuff later. Let's go back to the shipping thing though, because we'll wrap the shipping stuff up first. Because shipping will be a very, very important component of trade, as we shall see. No, not that screen. What's the other screen? This one. All right. Companies most exposed to the U.S. port strike. Now, remember, guys, the port strike is over. But it's interesting to note what would have happened if the strikes continued for over a week, right? The companies most impacted by the port strikes, let's see. Top companies by 20-foot equivalent units. So usually containers are sized in these units of TEUs, okay? So these are the ones imported in the East and Gulf Coast ports, September 2023 to September 2024. So you got a good idea of the fiscal year. So IKEA, Walmart, big ones, 42.9 thousand TEUs. 20-foot TEUs, and the Walmart 47.7 thousand of those 20-foot TEUs. Samsung looks like the third, and we got these other ones. Bob's Discount Furniture, 26.5 thousand. Home Depot 21.2 thousand. Amazon is surprisingly just 9,000. GM makes even more, has more trade through the ports than even Amazon right now at 10.5 thousand. Michelin, Goodyear, and Continental. So the tire companies here. So if we add Continental's 15.7, we'll add the 10, approximately 10 from Goodyear and Michelin. That's about 25,000 for tires. Pretty interesting that tires get shipped a lot. Everyone needs them tires. Dollar General 11,000. Folgers coffee, one of the cheapest coffees you can get, 7.8K. Oh, that says something. And then lastly, we got some Raymore and Flanagan furniture and mattresses. Man, so beds, tires, coffee. So outside of Walmart, pretty interesting mix here. And I didn't think these were large users of the shipping in those East Coast and Gulf ports. So, okay, blah, blah, blah. As the most exposed company overall, Walmart announced that it prepared for the strike by having extra inventory in key product categories to mitigate supply chain disruptions. For context, Walmart, the world's largest retailer, imported an average of 4,000 TEUs per month through these ports over the past year. The average value of one container can fall around 50,000. Anyway, that's a good summary of that. I don't see how people can drink that Folgers. Hey, you know, cheap coffee is cheap coffee. Even I sometimes use that instant Nescafe trash too. You know, sometimes you're just lazy. But yeah, it's pretty bad. Gotta drink that shit. That's pretty bad. Anyway, okay. Let's see what else here. Now, let's look at another chart. Let's look at I think I mentioned this before. It's worth mentioning again, especially with the trade and stuff. 113 million people will join the global middle class in 2024. The global consumer class amounted to 4 billion people in June of 2023 and is expected to reach 5 billion by 2031. So in 2024, we'll have 33 million Indians entering the middle class, and China will be 31 million. 57% of new consumers in 2024 will come from either China or India. And the rest of them are down here. You'll see Vietnam, Bangladesh, Indonesia, Philippines, Pakistan. But in general, yeah, it's dominated by China and India. So we'll have to really look into the new middle class as where the growth engine for the world is. And that's why the Chinese stimulus that was done about now over a week ago is so important, really important here. Because that really will drive how we look at demand of energy, and AI will drive it. The consumers will drive it. So let me read this bearish article that was written in June. So this was before the Chinese stimulus, okay? So everybody was very bearish on Chinese stocks. You have to remember, now when the media starts being bearish, you probably start thinking of buying. And when the media starts being too bullish, it's probably time to sell, right? So let's look at the bearish article Bloomberg wrote back in June. China's once mighty credit cycle is a fading force on world markets. Okay, so that's what they call. I think another word for it is impulse. So the credit impulse. All right. PBOC, that's the People's Bank of China, I think, yeah, the people. Everything is the people's money, the people's bank. Okay, that's how communism likes to term things. Disavows debt-led growth, seeks better use of old loans. Oh, so you see, China still didn't want to send the bazookas in and pump that bubble. They're like, nah, we're not going to increase our stimulus. We'll just try to keep it calm and use old loans, all right? Households, businesses shun credit anyway amid housing crash. Oh, okay. So this is pretty bearish. They're like, the Chinese consumer is so disenchanted by getting loans now that they won't even get no new loans even if China gives it to them. All right, let's see. China's credit engine, which once powered industries and markets all over the world, is stuck in low gear and set to stay there. Remember that. So these guys were saying like, oh, China's never gonna inflate their bubble again. Well, look what happened last week, right? Data for May due this week is forecast to show a resumption of loan growth after a shock contraction in April, the first for almost 2 decades. But nobody expects a return to the days when Beijing would engineer borrowing booms to speed up the world's second biggest economy, especially since the 2008 crash. China has pumped out credit to build homes and infrastructure, which kept the economy humming. Now it's stuck in a housing slump and already has plenty of roads and high-speed rail. Policymakers are seeking new ways to sustain growth like high-tech manufacturing that won't rely so much on expanding debt. All right. The People's Bank of China has repeatedly signaled it has no intention of revving up the lending engine again. Well, that was a lie. Even if it wanted to, there's little demand for credit. Well, that's to be seen, right? We'll see if these new stimulus packages the interesting thing now is that they're trying to do loans for stocks now. They're trying to make people buy stocks. So they're following the American model. And I think they introduced 401k type retirement plans for people like maybe a couple years ago. So that might get juiced up here. Government bond sales picked up last month, but the real estate crisis has left Chinese households and businesses reluctant to finance spending or investment by taking on new debts. Household savings that used to go into property are now going into the financial system. but there aren't enough borrowers on the other side, said Adam Wolf, an emerging market economist at Absolute Strategy Research. The PBOC is trying to create a new normal for credit growth. Oh, new normal, eh? If that effort succeeds, Chinese debt may lose its status as a strong leading indicator for the country's business cycle and hence for global commodity markets. Remember that. Every time these guys pump their loans, pump their debt, copper goes up, nickel goes up, zinc goes up. And not only that, this time we got silver and gold. Gold has been bought by the Russians and Chinese to get their reserves up for when the time comes, they won't rely on the dollar. Silver is also a precious metal, but very sensitive to industrial demands as well. So when you see silver perk up, that says something. So silver, copper, and gold moving up together, this is going to be a big problem for inflation. So even if Jerome Powell says, hey, I'm going to say I fought inflation, I won, well, we'll see what happens in the coming 2 years. I think if gold stays high in the coming year or so, that essentially is a leading indicator that we haven't beaten inflation. All right. So watch gold in the coming year. If gold stays high and the stock market and Bitcoin starts rising like crazy, when they all rise together, I would say that inflation will come back like a bitch in 2026 and into 2027. So watch for that. To see how that's worked over the past 15 years or so, one useful guide is the credit impulse. That's why I said, right? I said it was an impulse, which measures the ratio of new debt to gross domestic product. It shows 4 distinct spurts of stimulus since 2009. All right. China's credit cycle fails to pick up again. So you can see this chart here. It shows the pulses, the impulses where they pump, they pump, they pump. So far, they didn't pump for most of 2021 to 2022, 2023, right? Now we're entering 2024, and I guess at the end of it, they pumped again. As recently as early 2021, China was building its way out of the pandemic in a credit-fueled construction boom that sucked in raw materials. Remember, 2021 was also the time they started cracking down on Alibaba, right? A lot of other tech companies, a lot of service industries as well. And then they also cracked down on Bitcoin mining because Bitcoin mining was just way too energy intensive. Okay, that's a big reason they had to get out of that, because if you're going to start creating too much pollution, you have to understand China still uses a lot of coal. If you do a lot of Bitcoin mining, guess what? You're going to make smog everywhere in China. It's just something they just have to consciously get rid of. Now, you might say China exited the Bitcoin mining market, but they just moved it. They moved it to Canada, they moved it to Texas, and they moved it mainly to Kazakhstan. Kazakhstan, being a neighbor of China, isn't a very convenient place to just dump everything back there. So if you just lift up a factory, take off all the ASICs, all the GPUs, everything out, rip it all out, you could just set up shop somewhere else. Yeah, Kazakhstan makes a lot of sense. It's just pretty much a plain, right? Kazakhstan ain't got nothing but borat and wheat fields. A lot of free land. You can just put that shit up there. So around that time, the Federal Reserve researchers concluded that China's credit policies explain more than 1/5 of all commodity price movements. All right, let me read that again. So the U.S. Federal Reserve, high IQ motherfuckers with PhDs, they concluded that China's credit policies explain more than 1/5 of all commodity price movements. All right, since the global financial crisis. So anything China does, You watch the metals, you watch the energy, the oil, right? The crude, the diesel, everything. Watch it. And not only that, look for pig prices. So lean hogs, they love to eat pigs over there. They love that pork. And you look also at wheat, soybeans, rice, everything. All right, that's all that's going to be there going into China, and that's going to affect everyone else's prices. In a separate study, they estimated that when China's credit impulse rose by 1% of GDP, it delivered a matching boost to global trade and a 2.2% increase in commodity prices, as well as lifting the Chinese economy. All right, there we go. But since 2022, the credit impulse has essentially flatlined. The credit growth data is still a reference to gauge Chinese industrial activities, but it's a less strong indicator now. Or is it? Said Li Shuizi, head of Chaos Ternary Research Institute. What an interesting name. I like that. Chaos Ternary Research Institute. A commodity analysis firm. The economy used to be led by property and infrastructure investments, but the new quality productive forces that Beijing is now backing involved other forms of financing like venture capital. So basically, China is trying to be more American, right? They're trying to leave all this stuff for some other guy. I'm assuming they're probably just going to do Belt and Road and make all the Africans do all that side of the stuff now. So we made China into the factory of the world. I'm sure China's trying to make Africa into the next factory of the world. Maybe that's how it's going. The lending slowdown has spurred debate over various alarming scenarios for China's economy. One is a liquidity trap, where lower borrowing costs are unable to stimulate growth. Another is a balance sheet recession, where households and companies are focused on clearing debts rather than spending. Bad. Both of these, things, liquidity traps, balance sheet recession, sounds like deflation, right? So for most of the year and half of last year, everyone was saying China's in a deflationary spiral, deflationary spiral, deflationary spiral. And you know what that means? Well, you better boost your economy or people are going to get pissed. And if they're going to get pissed, then you're probably going to go to war, right? As China seeks a growth model based on improving productivity instead of expanding debt, the PBOC's priority is to make sure existing funds are used more efficiently, according to Wolf. To the extent it succeeds, the relationship between aggregate credit and industrial cycles should break down, and there are signs that it already is. Okay. So I think, man, I didn't know this article was this long. All right. Our authorities took steps in recent years to rein in over-indebted real estate developers and clean up so-called hidden debt owed by local governments, which doesn't appear on their balance sheets. Property and local government financing vehicles accounted for about 70% of new credit generated over the past decade, according to an estimate by Zhang Bin, a researcher with the Chinese Academy of Social Studies. The PBOC is trying to make sure credit is reaching the real economy instead of idling within the financial system. Authorities have cracked down on loopholes that allow companies to make fake loans, arbitraging between higher deposit rates and cheaper borrowing. An era when loan growth was seen as a key benchmark by investors and policymakers alike has left banks with incentives to plump up their numbers. A case in point is the short-term interbank loans known as bankers' acceptances. Their costs fell to the lowest level this year in May, according to data from Zhongtai Securities Company. That's usually a sign that lenders are swapping bills with each other to boost loans because they're struggling to find companies that want to borrow. So are you telling me all these banks are just trading each other's loans and just cooking their books this way? All right. Even if such techniques help to boost the loan figures coming this week, investors won't be impressed and will look deeper, said Mary Xia, research director of Beijing Shifang Asset Management Company. The market understands that the weak credit growth is due to problems on the demand side. All right, so we see a lot of new loans now. We see stimulus. We see all kinds of things from the last week for China. Now we're going to wait for the demand side, aren't we? That's the problem. Who is going to take that loan? And who's going to take those stimulus and put it back into the market? All right. Okay, yeah, I'm going to talk about the court stuff a little later. Yeah, all right, I'll see that. I definitely have some articles on that. But let's go back. I'm going to go back to the charts now. So you guys know this was bearish, right? This was bearish. So Bloomberg was telling you guys, get away from Chinese stocks. Get away back in June. Let's see. So was that the correct move? Was that the correct move? Let's go back here to lithium, right? So lithium, let's see, where did bottom? Where did lithium bottom at? Around September. Let's see. So the article was written in June, around June. So here we go. That's lithium. Now let's look at how did China do? So we look at the Hang Seng, right? Let's see. So the article was written around June. Okay, around here. So then, yeah, people keep selling. So it reached a local high in May. So the article was written around June. So they keep selling. They keep selling all the way into July. That's where the bottom was. You see this high volume here? Yeah, that's how you know somebody was eating it up at this price. And that's why at that point it just kept going up. Even you make this new minor low, yeah, people knew that this was the right price. Somebody did anyway. And boom, now we jump up. Like, how much was this? I think overall, Hang Seng Index rose about 32%. Damn, amazing. I mean, if you weren't paying attention to China, you missed out on that, I guess. So, but I think what's interesting is how it affects the commodities. So we got the lithium. So this is the ETF for all lithium producers. It's been going down since 2023, so overall pretty crappy. But starting September, it was already moving up. Now, did someone know that China was going to do something the week ahead? Because this was already moving up from this low, September 9th, the week of September 9th. And then they started pumping September 23rd, right? So they already knew then. All right. So let me go back to this article about this particular lithium stock, PLL. All right. So this is Piedmont Lithium Incorporated, symbol PLL. So I am going to look up some articles for you there, because I think this matches with the North Carolina stuff. Is it a conspiracy or not? Let's see. Elon Musk. Okay, let's see. Gotta find my article. I'm not as organized as Portia is. I have so many tabs now, looking up stuff to for you guys. So I have my quartz articles. Yeah. So I need my Piedmont. I don't have my Piedmont handy. Let me find it. Okay. There we go. I think this was always a rumor that Elon and Tesla were going to buy Piedmont. It was always a rumor. So let me look at an old article for you guys first, so you guys have the history. This rumor is quite old. It's probably been at least a couple years. They keep saying like he was going to buy this company. So let's see. It's from Reuters. Elon Musk and Tesla break ground on massive Texas lithium refinery, right? This was May 2023, last year. Okay. Tesla on Monday broke ground on a Texas lithium refinery that CEO Elon Musk said should produce enough of the battery metal to build about 1 million electric vehicles by 2025, making it the largest North American processor of the material. The facility will push Tesla outside its core focus of building automobiles and into the complex area of lithium refining and processing. So you have to understand, Tesla, this is why Tesla is a hard company to gauge, right? Like, some people would say it's a car company. Then you have it like buying out Solar City. Then you're saying like, oh, it's a green energy house, like a servicer or whatever. But that business pretty much died out. I don't think any of that Solar City stuff exists outside of their batteries for houses. So they have the large battery packs they have for the house, and I think the most important thing that they got from Solar City was the financial team, actually. So the financial department of Solar City was very good, excellent at what they call financial engineering. So they could make their balance sheets look like, wow, they're making a profit. But when in fact they're not, because they're just using subsidies, they're hiding, they're moving money around, assets around. So a lot of the accounting is magic in these. And I think Tesla is one of the companies that does it the best at this point. They really can make themselves look like a very high value company just by moving numbers on a spreadsheet around. They just really can do that so well. Anyway, the facility will push Tesla outside its core focus. Yeah, I read that. A step Musk said was necessary if the auto giant was to meet its ambitious EV sales target. Okay. As we look ahead a few years, a fundamental choke point in the advancement of electric vehicles is the availability of battery-grade lithium, Musk said at the groundbreaking ceremony on Monday, with dozers and other earth-moving equipment operating in the background. Musk said Tesla aimed to finish construction of the factory next year and then reach full production about a year later. The move will make Tesla the only major automaker in North America that will refine its own lithium. Currently, China dominates the processing of many critical materials, minerals, including lithium. There you go. So Tesla is being self-sufficient right now. It wants to be self-sufficient. This is very key. If you control the supply chain, which if you look at Apple, this is the key thing Apple did when it did the smartphone. When it introduced that first iPhone, the first thing it had to do was control the supply chain. So Tim Cook at that point, I think, was the chief, supply officer. Was there a chief supply officer position made for him? But in any case, I forgot what the official title was, but he was the supply chain man. So Tim Cook, when Steve Jobs got him, was like, yeah, that really was the key to making smartphones successful. If you had to rely on suppliers that, weren't reliable, they couldn't give you the glass for that phone in time, they couldn't do the molding for the plastics, they couldn't do the PCBs, the chips, every chip in that iPhone was specifically made. If they couldn't produce it at the right schedules and be done in the right quantities, this is so hard. Supply chain management is like the key to success for many of these companies. And you want to be what they call vertically integrated. So Tesla's trying to be vertically integrated right now. Let's continue with the article. Texas wants to be able to be self-reliant, not dependent upon any foreign hostile nation for what we need. We need lithium, Texas Governor Greg Abbott said at a ceremony. Musk did not specify the volume of lithium the facility would process each year, although he said the automaker would continue to buy the metal from its vendors, which include I hate saying this company's name, Albemarle. So this is the biggest miner. ALB is the ticker. They are the largest ones. And Levant Corp. I don't know how big. I don't know if they're second place, but yeah, LTHM is a ticker for Levent Corp. We intend to continue to use suppliers of lithium, so it's not that Tesla will do all of it, Musk said. Albemarle plans to build a lithium processing facility in South Carolina that will refine 100,000 tons of the metal each year, with construction slated to begin next year and the facility coming online sometime later this decade. Musk did not say where Tesla will source the rough form of lithium known as spodumene concentrate, which will be processed at the facility, although Tesla has supply deals with Piedmont Lithium and others. So there we go. Piedmont Lithium, ticker symbol PLL. All right, I think that's enough. We don't need to read the rest of this. Yeah, I'll read this part here. Musk in 2020 told shareholders that Tesla had secured rights in 10,000 acres in Nevada, where it aimed to produce lithium from clay deposits, which had never been done before at commercial scale. So that's why you see Tesla super factory, a gigafactory in Sparks, Nevada. Sparks, Nevada is probably about 20-30 miles from Reno, Nevada, if you know Reno. So if you know that area well, you should understand that those places have a lot of incoming economy due to Tesla building all of its new factories there. And now that I think Tesla's headquarters is moving right to Texas and all that, so a lot of states that have no income tax. So Nevada is one of them. Texas is one of them. So that really helps. So let me try to find the other article, if I can figure that out. Oh, tropes. You got Solar City. I got Solar City just to get back into Tesla. So I sold Tesla on and off. I bought Tesla. I sold Tesla. And when Solar City was being merged, it was such a great deal because you could buy cheap shares of Solar City just to get back your Tesla shares at a discount. They were crashing that Solar City like undervalued compared to like the deal they made with Tesla. So it was a great way to get cheap Tesla shares again. So yeah, that was nice. But yeah, stock market's always crazy, man. It's always crazy. You always when you try to trade the news, you're taking a big risk. Things never really work out that well sometimes. So let me see if I can find the latest Piedmont Lithium news. Man, I gotta get more organized. Jesus. So I have this other one. So this article thinks it jumped because of some Ghana deal. Piedmont Lithium shares jump on Ghana environmental permit. So I'm not sure if this is the real reason why it went up. But yeah, shares of Piedmont Lithium are up 20%, riding on a significant wave on the basis of a series of positive events in the company's recent past, blah, blah, blah. So, it's tough to say. A lot of times people just see a stock move and then they're trying to figure out, oh, why did it move up? Sometimes it's nothing just except for a short squeeze, Some people might just squeeze out the stock because they overly shorted it. So that's probably one reason why. All right, let me see. Let me see if this conspiracy is right about the lithium, North Carolina, blah blah blah. I think this might be it. Here we go. So you saw that Ghana thing, right? All right. So maybe it's because of Ghana, or maybe it's something else. So this is from April 2024. Tesla supplier Piedmont Lithium gets key North Carolina mining permit. So the first article I read said something about South Carolina, right? Now we got something about North Carolina back in April. Is that lithium? You're gonna autograph that piece of lithium right there for me? North Carolina regulators have approved a state mining permit for Tesla supplier Piedmont Lithium to develop one of the largest U.S. sources of the key electric vehicle battery metal. Although key financing and local regulatory challenges remain, the approval from the North Carolina Department of Environmental Quality, which was announced by the company on Monday and is conditional on the posting of a $1 million reclamation bond, removes one major hurdle to Piedmont's plan to tap a large lithium deposit just outside Charlotte. Shares of the company, which first applied for the permit in August 2021, rose 15.9%. Okay, so this was way back in April. Remember that. April 15th. Okay, tax day, I think. Blah blah blah. The go-ahead for the 500-foot deep mine comes despite widespread opposition from neighbors worried about water, noise pollution, and other potential problems. The years-long opposition to the project, which would become one of the few lithium mining producing sites in the U.S., illustrates broadening tensions in the country as resistance to living near a mine clashes with potential of EVs to mitigate climate change. There's a lot of pressure, isn't there? A lot of political will. Piedmont must still obtain a local zoning variance and financing for the project, estimated to cost more than $1 billion. The company has applied for the U.S. Department of Energy loans via a program through which rival Ioneer, I never even heard of this company. INR is the ticker, and Lithium Americas LAC, I've heard of that one, have already obtained financing. Asked when Piedmont would pay the reclamation bond, Piedmont CEO Keith Phillips told Reuters that the company is taking steps to put the bond in place as soon as possible. Piedmont agreed to a deal with Tesla last year to supply spodumene. Remember that? The spodumene concentrate, a key raw material for making batteries, to the auto giant through 2025 with an option to renew it for another 3 years. Yeah, let's see. So that was put in April. State officials had expressed many concerns about Piedmont's plan to discharge chemicals into the public sewer system, according to regulatory filings. Piedmont, which also is working on lithium projects in Tennessee, Ghana, and Quebec, must still obtain state air quality and wastewater permits, both of which are routine for mining projects in the state. Importantly, Piedmont must also receive a zoning variance from officials in Gaston County, where the project has been opposed by several county commissioners. Now, I wonder, where is Gaston County with relation to all that mudslide and stuff? Is that the conspiracy people are trying to tell me to go to? Is this what's going on? I don't have no clue. Come on. This is what happens when you gotta use the internet for stuff. I don't think it is, right? No, it's near Charlotte and all that. I mean, was it that badly hit? I don't think so. Yeah, I don't think so. I don't think it got hit by. So, whatever. Let me read anything else. Blah blah blah. Anything else with this conspiracy theory I'm reading here? Okay, so let me read this article. I'm going to read this article. I think we're pretty much done with this one. Yeah. Let me read this one. So this is in May. So this is 1 month later. Piedmont Lithium wins U.S. state mining permit after posting reclamation bond. So after 1 month, they got it. All right. Tesla supplier Piedmont Lithium has officially obtained a North Carolina state mining permit after posting a $1 million reclamation bond to develop an open pit mine. Ooh, open pit mines. That's really environmentally unfriendly. All right. You know, I'm getting really skeptical about this Green New Deal. How about you guys? We got to open up all these mines everywhere now. I'd rather have black oil, you know? If Saudi Arabia keeps doing that, smog would be preferable, maybe. That will become one of the largest sources of the key battery metal. The North Carolina Department of Environmental Quality on Tuesday mailed the 16-page permit to Piedmont after nearly 3-year review process for the controversial mine, according to regulatory filings. Did they speed up? They speed up this process? You know, you got to pass it. The permit was provisionally awarded last month, pending the bond payment. We're pleased to have final permit, Piedmont spokesman Aaron Sander told Reuters. The permit, which includes detailed instructions for blasting, waste rock storage, and multiple other areas, is transferable to a third party should Piedmont be sold. Yeah, not this. Piedmont must still obtain a zoning variance from officials in Gaston County, just outside Charlotte, for more than $1 billion for the $1 billion project. State regulators stress that their permit does not supersede or otherwise affect or prevent the enforcement of any zoning regulation duly adopted by any incorporated city or county. Okay. We'll see about that. All right. So let's go back. So I'm going to have to play some videos for you guys because we have to get back to the other news now. I think that's it for lithium. But I will say, people have been asking me about lithium before. I remember False asked me about this one company. I think it was called LAAC. That's a ticker. It looked like trash at the time I looked at it. I don't think it looks trashy now. So it might be worth considering. Let me show it to you. Let me show you the chart. So yeah, I mean, out of all the other lithium miners, it looked pretty bad. Not horrible. You know, they all move alike, mostly. They all move alike. But we see a nice pop here, right? We see a nice pop here. 30%. 30% on the China news. Nice China news popped it up. So we got an impulse. China is the impulse engine that drives the commodity markets. Remember that. That's what I said. That's what I said with that article. So let's look, right? Let's look at copper. We got our impulse. It's moving back up. Now, I think we're going to have trouble with silver, though. Silver is probably going to take a while to move up. See, it's still kind of waffling. It wants to break out, but it's not committed. So yeah, I mean, yeah, we gotta wait for that. Now the other one is uranium. I remember All Seeing Guy was asking me about uranium. I think he bought at the he probably bought it here. He's at a loss. He probably recovered most of that, maybe all of it. He's probably break even now if it keeps going up a little bit. So this uranium ETF, URNM is the ETF. I think he said he was in symbol CCJ. So that's Cameco Corporation. You see that? He's probably broke even by now. Unless he bought right at the top, I think he's fine. All right. So see, he's fine now. Now the question for everyone else is uranium gonna be the new bad boy? Okay, because I've gotten some news for you. I mean, I played this video last week, sometime maybe a couple weeks ago, so I'll just play it again. Yeah, I think it's a good one to play again. All right, let me hide the comment. Blah blah. I need a producer or something. I need to, yeah. Either I get more organized or I gotta get Portia to be my producer.
Start with this. Will Wade and Dina Bass here at Bloomberg leading with this quote, this paragraph going into the weekend. The owner of the shuttered 3 Mile Island nuclear plant in Pennsylvania will invest $1.6 billion to revive it, agreeing to sell all the output to Microsoft as the tech titan seeks carbon-free electricity for data centers to power the artificial intelligence boom. Is this the beginning of something much bigger in this country?
I think so. I mean, look, there is a clear demand for, building data centers that can train these large language models at the scale that currently, we are not at. And what they're trying to do is focus on renewable energy. So all these large hyperscalers have goals around using, more renewable energy. And look, that's why they are going down the stack in terms of doing it themselves, because they know exactly the configurations for these data centers that they need, what kind of power requirements they have. And I mean, to me, this is a classic case of vertical integration. Microsoft owning the stack end to end, from power to chips to literally the software they're producing.
Have we had a big enough conversation about the costs associated with the power that's going to be demanded?
Well, so power in the end is still a regulated entity. Look, they will, yes, they have, much bigger power requirements than they had 5 or 10 years back. But in the end, the government is overseeing that. They will get that support, and the government wants Microsoft to build large data centers here because they want to own the data. They want everything to be done onshore. So I think I wouldn't worry too much about the power costs. It's more the chip costs that they have to deal with, and that's why they'll probably go with their own chips at some point.
But to John's point, I understand that they're regulated entities, but if they're going off the grid in order to provide their own electricity, at what point do we have to start to look at the fixed costs that are increasing, that are having to be provided privately by some of these big tech companies in order to provide the reliable service they're promising?
I mean, there's no doubt that, their cost of goods will go up, but it's already gone up. And look, the big bet is that AI will drive productivity. Now, you could argue we are not seeing that productivity now, but in their end product, if they can offer a co-pilot that helps you, become 20%, 30% more productive, then companies or consumers don't mind paying for that. So the big bet is with this AI wave is it's going to drive productivity. And you're going to start seeing that 2 to 3 years down the line. Otherwise, you'll see some cancellations in terms of, the CapEx plans or what they intend to do in the long term.
Aren't new data centers on hold because they cannot connect to the grid because they're just too powerful? How much is this going to be basically the source of new deals? You have to get your own basically mini grid in order to operate.
Well, so again, I think, yes, they need that power. They need the large data center setup, and they need big AI clusters. I mean, remember, as long as the large language models keep growing in size and the next GPT-5 version or the Anthropic model is 10 or 15 times bigger, you need more power. And that's where, they will work with all the entities in the chain, whether it's energy companies, whether it's private equity guys, and those are the
Okay, you heard that. And Tropes told me to look at this ticker. Let me get that ticker for you. I think it was ASC. Let me try to find it. Yeah, I definitely could get more organized here. Speaking of, I think it was called VST, right? That's right. So I think that's very good. That's a very good ticker to look at because it really highlights what is going on right now. Because I've been saying that energy stocks, water stocks, basically utilities, old school utilities are going to be the next big thing. You see the copper prices rising. The demand is coming. The demand is coming. China is pumping, and we are going to pump with it because we also need the same things, because it's going to be an AI war out here. It's an AI war. So let me play this video before I show the ticker.
Deirdre Bosa, it sounds like right now we're at 85 miles an hour and nobody's taking their foot off the gas.
We are. We probably need to be going like 150 miles an hour to justify some of these valuations, but the momentum is there. Let me first give you the takeaway. The private Gen AI bubble, it does continue to inflate, but something else is going on too. The darlings in the space, they're beginning to deliver more revenue, helping to justify those lofty valuations at ever higher rounds. According to a document that I viewed, Anthropic is telling investors that it is expecting $1 billion in revenue this year. That would be an increase of more than 1,000%.
Okay. Okay. If you're growing by 1,000% year over year, you either you're just lying or this is crazy. So Anthropic is essentially OpenAI's competitor. I think they were created from some of the ex-employees of OpenAI. Okay, guys. So there's even an internal war in Silicon Valley between different AI companies, let alone AI wars with us and other countries.
Year over year. Now, the breakdown of it, which I also saw, that gives us a glance at how the Gen AI startup is making money. Third-party API is expected to make up the majority of sales, 60 to 75% of the total. That refers to the interfaces that allow external developers or third parties like Amazon's AWS to build and scale their own AI applications using Anthropic's models. That is by far its biggest business, with direct API sales a distant second, projected to bring in 10 to 25% of revenue. Chatbots, that is its subscription revenue from Claude, that chatbot, that's expected to make up 15% of sales in 2024 at $150 million. Now, in terms of profitability, this document suggests that Anthropic, at least for now, has thinner margins than typical SaaS companies. The startup's expected aggregate gross margin this calendar year is 38%. That likely has to do with higher.
SaaS, she said SaaS, so SaaS. SaaS. Okay, I think that's man, it's been so long since I was in working in the industry. Man, I think it was service as a system. Service. Oh man, let me look it up for you guys. I don't want to say something stupid right now. Software as a service. Okay. Software as a service. SaaS. This is exactly where they came up with the whole subscription model, and that's why you don't buy your music, right? You don't buy a CD, you don't buy a cassette tape. You rent out your music. You rent out, even now, you get Word, Excel. That's not even that. You can't buy that anymore as a standalone product. You have to pay a monthly subscription now, and everything's like that at this point.
38%. That likely has to do with higher upfront costs, like the need for GPUs, which we know are expensive, and they result in high infrastructure and operational expenses. Investors, though, especially in venture capital here, they're willing to look past those expenses if the top line is growing at 1,000+%. Better revenue growth that also helps those valuations look somewhat more reasonable. The information reported that Anthropic is in talks to raise another round at a $30 to $40 billion valuation. With $1 billion in projected sales this year, its sales to valuation multiple would actually be lower than it was 9 months ago. Same story for OpenAI and Scale.ai, two other darlings in the space, as they continue to reportedly grow revenue faster than their valuation increases. Now, to be sure, guys, these are projections, and one source that I spoke to voiced some skepticism that Anthropic will actually hit this target. But there could also be recurring revenue, better margins elsewhere in the Gen AI space. Scale.ai's founder and CEO Alexander Wang posting that his startup hit $1 billion in ARR growth. That would be a 4 times increase year over year. Of course, these numbers are small compared to the mega caps, but what they do suggest, guys, is that these upstarts, they have.
Yeah, I mean, OpenAI, Anthropic, all these companies are private. Okay. Now, Microsoft is heavily invested in OpenAI, so they essentially will absorb them. So probably OpenAI will never become an IPO unless Microsoft just buys them and spins them right back out. Anthropic, I have no idea who's eyeing them, but I think they're. Let me see. Some big company is putting money into them. So let me see, which one is it? Funding. I think it's Amazon, right? Yeah. Because all this is private. Yeah, it's like SpaceX. It's all private investors, So unless you got tons of money and can go to Stanford University, well, so it's called Sand Hill Road in Stanford. It's right by Stanford University. So that whole road is a bunch of small offices. If you're rich, you roll in there, you walk, knock the door, knock on the door, get in there, and just tell, hey, I want to invest. And they'll get you shares in these companies, but it's all private. It's not in the public market. It's not on the NASDAQ or NYSE, so you can't get it. So yeah, I think Amazon is the one that is funding them. I think they put in about $4 to $5 billion. I think billion, right? Yeah, billion. Yeah, with a B. And Google, I think, put in $2 billion into this guy. So yeah, there you go.
Momentum, and they're making inroads even against these powerful, well-capitalized incumbents.
I wonder if so AI has the partnership and the investment with Microsoft, and it was always Anthropic has a relationship with Amazon, right? Are all
And
of these
Google.
and Google? So I'm just wondering if those
There you go. I was confirmed.
get closer. Why can't an Anthropic be to an Amazon or a Google what AI is to a Microsoft?
What OpenAI is to a Microsoft. I think that's exactly it. And what this document that I saw really tells us is that the majority of that revenue is coming from that partnership. That's third-party APIs. I would imagine that Amazon's AWS uses or has a lion's share of that, right? Because they have this partnership. They're developing their AI applications in the cloud using Anthropic's model. So that is still a big source of revenue. And you also have to wonder, right? A lot of these mega caps are looking at developing their own foundational models, maybe based on open source models. So is this revenue going to keep coming? And I think that's where some of the skepticism comes from as well. Can it continue to grow that top line through those third-party sales if this whole space is becoming commoditized?
Okay, Deirdre, still a lot of money going in, though. Thank you very much.
There is.
All righty there. Let me see. I am going to go over some news, but first, let me put up the chart of VST that Tropes wanted me to look at. It's very good chart. Very good. Oh man. So this is essentially a utility stock, okay? They provide energy and services, but they are trying to I think what I saw was that they are moving to provide the energy into the AI sector, all right? So let's just do some quick charting here. We see this major high that was made in May, so that's the resistance. You see this candle with the highest volume so far since August. You see it penetrated that and it just started flying. So whoever was stuck here shorting this stock, they probably got screwed over, and that's why it's just like rise ever since. And I think all the stuff that's been happening with Jerome Powell, it just really once you start lowering the rates, you're good to go. Utility stocks look really nice because in general, utility stocks give you a dividend. And if the interest rate starts going down, bonds stop competing with utilities. Because why would I buy a utility stock, which I have to worry about risk because it's a stock? So the dividend I get is totally dependent on what price I bought it at. And if the price is going down and it's going lower than the price I bought it, it doesn't matter if I got a 3%, 4%, 2% dividend. I'd rather get that 5% in T-bills, right, from the U.S. government. Or I just have a high yield savings account, which is tied to the Fed, right? So that's why when you look at asset classes, you look at different classes of stocks, bonds, and whatever, you have to understand they're all competing with each other. So even if a company is doing so well, it might not matter. The stock price may still go down because it's competing with something else. Like if I look at Japanese stocks, right? I'll be like, hey, I'm going to buy Japanese stocks because they look undervalued. It has nothing to do with the company over in some other place in Europe. Maybe I just sold a ton of shares in some European company for no reason, just because I just want to move my money to somewhere else where I'm getting more yield. So there's always risk, there's yield. So a lot of times stocks move outside of the fundamental of a company, completely opposite. So this is what it looks like now, because I'm sure a lot of people are buying at this low here for fundamental reasons. But the reason it's popping up right now is because now that the interest rates are not going to continue going up or staying high and actually going down, utility stocks like this, which are aggressive in AI, look way better. So you have a mixture of a utility stock that's tied to technology. And this looks more attractive now, right? So that's probably why you see this action happening. So yeah, you should look into these things. Anyhow, hey Blacks, I can't open the panel until I'm done with all the stuff I have to cover for the next hour or so. So if you're still around for the next hour, like, yeah, you can come. I'll let you guys up. You guys can grill me and stuff. But yeah, for now, because I have to go through my lessons in the next 15 minutes, like the lesson that I'm gonna go. So every time I do this, I'm gonna have to do a lesson. And you know, there won't be any questions for that unless it comes in the third hour, I suppose. If I'm doing a long stream tonight, yeah. So we'll see. Okay, so let me look back at uranium. So now this is the uranium ETF, URNM. Yeah, I'm really liking the way it looks. It's building a base. So you had this. So you see these highs here. You see this? One high, two high, three highs, four highs. And then after that, it moves up for 2023, overcoming these highs. Then it had to make it go back down, but it still held the fourth high here. It didn't crash down back to here, so we're not afraid of that. And it recovered, making this double bottom. So now we're back in this range again. So what I think is what's going to happen is we're going to go sideways for a bit. And then in 2025, it'll break out. Okay, that's my theory. Because it made such a steep drop here, it can't recover that quickly. You're gonna have to move in this area between 46 and 50 for URNM. CCJ is probably the leading one right now. But yeah, once you make this kind of correction, you don't expect it to make a new high. If it does, it's coming back down. So we're going to be sideways a little bit more up in this higher range for CCJ. So all seeing guy, I know you have this stock still. So I would probably keep buying, accumulating every time it gets near 40, keep buying, because then once it finally wants to make it back up to 55, it's going to go to the next level higher. And I'll have to discuss what price target it will be after I see the chart fully complete. Yeah, it has to complete the full move. Okay. Let's see here. I bought some ARM when it IPO'd. It shot up and missed taking profits before it slammed back down. Oh, man, you were in ARM. Yeah, that was a trap. Yeah. Anytime there's a stock with an IPO, the first move up, get out. It's going to retrace all the way. It always does that. Every time there's an initial hype move, it always get retraced. You can buy it back again later. Yeah, that's how it always does. IPOs always, like, yeah, without fail, I think they always do that. And ARM was a public company before it got bought out by SoftBank. And then it had to be spun out again. So yeah, I remember you talked about that. And I said, like, no, whatever. I mean, it doesn't look bad. So yeah. Okay, let's go to the news of this week. I think this is important for you guys to know about. Because several important things happened in the bond markets. Okay, and then we'll get into our lesson after that. This week, last week, previous week. All right, I got it here. TC2000. I've heard of that before. TC2. That sounds familiar. Yeah, it does. I think it's a charting program, right? Yeah, I don't know too much about it. I know a lot of boomers use the TC2000. They also use something else. Yeah, I mean, the problem is like I'm not like a hardcore trader. Like I'm not gonna look. And from what I could tell, a lot of people rather use Think or Swim rather than anything else right now. CKJ3 uses Think or Swim, but it's really a personal preference. But it could also be what features they have that you may like more than others. You're gonna have to figure that out. I remember there was another competitor to TC2000 that other people used. Dang, what was it called? I think it was Trade Station. Was it Trade Station? Man, is that another one that boomers like to use? Yeah, man. What's the other one? Because there's a lot of old school traders from the 90s. Once they lock on to some software, because look, TradingView is new, right? Thinkorswim is pretty fairly old, but there's older than Thinkorswim. So these guys, like, they've been trading probably when it was like still working on DOS, man, MS DOS or some shit. Let me see. Oh, the Jake Bernstein. Oh man. Yeah, let me see what he uses. This one, blah blah blah. Was it? Man, it got to be Trade Station. Yeah, I think it's Trade Station. I don't know. Unless it was something else. Oh well, yeah. That McClellan oscillator website you were showing has graphs that look like 90s PowerPoint. Hey, bro. McClellan, he's the son of, both his parents, McClellan's parents, were charting by hand, bro. So when they came up with like the exponential moving average, all that stuff, they were doing everything by hand with graph paper. So these people are really ancient. These guys been trading for a long time, doing things for a long time. I will show that McClellan website because they have some more interesting articles I want to show you, but I don't know if I'll have time today. I'll probably have to do it next one tomorrow. Yeah, it's the info that counts. It is. Yep. That's it. Yeah, a lot of people will be stuck in their ways. I know. If I keep using the same software, I ain't gonna change. Believe that. I'll be like, hell no. It's like, you think I have time to jump from this software to that software? I'm like, my brain cells are rotting away, and I don't got time, because it doesn't really give you an edge, right, to learn something new. It's like, unless they have a feature that I really need, most softwares, like trading softwares, can be comparable for the most part, and they all have a scripting side to it. I just like trading TradingView because their language to script indicators, I like it. the language, their scripting language better than the others. But I think Thinkorswim is pretty comparable to it. So, and the benefit of using Thinkorswim is if you are trading a lot in the Charles Schwab TD Ameritrade, you can script out everything so well that you can automate your trades a little bit better that way. And yeah, you should talk to CKJ3. You know, I'm not that active of a trader. If you become that active, you know, your tax documents become insane. You have so many damn rows of columns of things that you have to automate you have to input all your spreadsheets into the thing, and you have to automate how you compute certain things. It's just like, I don't do that. All right. So yeah, Tropes, I like TradingView so far. Yeah, it's the Zoomer way to go, and most young millennials. So yeah, I like the way it looks personally. I just don't like that you have to pay a lot of money nowadays for all the features that used to be like cheaper or were free. So, but you know, if you make a lot of money from stocks, you don't really care. But it is annoying. I would say that, you know, they just start gouging you, because once you start using it, you won't leave. So anyway, yeah, that's it. Okay, let's go to the weekly news. I think this is important for you guys to understand the bond market. This is why I tell you the bond market leads everything else. Yeah, extra tax. You know, that's right. I mean, Clue Channel was talking about his trading strategy where he just like automatically sells when it's a certain percentage because he's using a mathematical formula to. But it's like, dude, if you're trading that much where you just like buy sell with an algo, you know how crazy your tax documents start looking. It's like you're gonna have to you have to make a script for your tax documents to process all of that stuff, dude. I am not interested in it. The only way I would be interested if they got rid of wash sales, because a lot of times when you buy or sell that frequently, you have losses, and then you have to compute all the lost sales. And so the wash sales will start becoming a binary tree where every trade you make like branches out into another like potential, where you have to like cancel out this trade with another trade just because you made a win and a loss. And then it's just like, whoa. Either you do it correctly, or the IRS will just ignore it and be like, well, I'm so dumb and lazy, I won't verify if he did the math right. Or they'll keep it, and then later on, you know, the IRS wants to F with you. They'll figure out you made a small, simple error somewhere and make it a big deal and try to send you to jail just because of that shit, right? So, anything that complicates your tax life, I do not like, because I feel like that's just a pit that the IRS is going to use against you some other way. So the federal government, if they want to mess with you, could use that, just like Trump, right? They'll be like, hey, you did this wrong in line 14 of tax form Schedule B, Schedule C, or some bullshit. And you're like, what the fuck? I don't have time to, you know what I mean? So to me, it's like, keep your life easy. I don't think it's worth the extra whatever percent. Like, unless you're telling me what you're doing is giving me tons more gains than what I'm doing. Like, I feel like it's not worth it for whatever percentage. But you know, that's just a risk reward type thing. You're gonna have to deal with it yourself. Like, you have to like gauge how you want to deal with taxes and how you want to deal with your profits, because there is a trade-off eventually. Everything has a trade-off here. Yeah. So anyway, we got off the beaten path for at least 15 minutes on that stuff. Let me get that. Yeah. Here we go. So we had ISM manufacturing, which is weak as usual. You see the manufacturing sector of the economy is in a contraction. So let me remind you that anything less than 50, the number is less than 50, that is a contraction. Anything over 50 is expansion. But the interesting thing is you got this job openings, which was at 8 million. So that tells you the labor market is not weak. You have a lot of job openings. Of course, there's a caveat to that. Sometimes a lot of companies, they put a lot of BS jobs offerings out there into the internet. So if they're counting that, it might be not a good indicator of how good the labor market is doing. But for the most part, the stock market will interpret it as like a tight labor market if you see a lot of jobs being offered. Yeah, the ISM manufacturing prices. So goods are deflating. So if you're buying goods, you would say, hey, this is good for the inflation, right? Because now they're decreasing. Now let's move on to Thursday's numbers, which is the service side. Service PMI, 54.9, larger than the 51.3 expected. So this is inflating. So let's look at it. The ISM service PMI in US soared to 54.9 in September 2024 from 51.5 in August, and much higher than the forecast of 51.7. The reading pointed to the strongest growth in the service sector since February 2023 amid faster increases in business activity, new orders, and inventories, while employment declined. Price pressures increased, and backlog of orders remained low. So let's see what the commentary is. The stronger growth indicated by the index data was generally supported by panelists' comments. However, concerns over political uncertainty are more prevalent than last month. Yeah, no shit. Pricing of supplies remains an issue, with supply chains continuing to stabilize. One respondent voiced concern over the potential port labor issues. Well, that's gone. We don't have any of that anymore. The interest rate cut was welcomed. However, labor costs and availability continues to be a constant concern, right? Be a concern across most industries. Okay. So we see there, this is echoing the jobs JOLTS data here. So it is tight. That's what they say. Now, the big kicker is Friday's unemployment rate. It went down. Unemployment rate in the United States fell to 4.1% in September 2024, the lowest in 3 months, down from 4.2. It's still high, but at least we're not going up. So surprising market expectations, which had forecasted the rate to remain unchanged. The number of unemployed individuals decreased by 281,000 to 6.834 million, while employment levels increased 430,000 to 161.864 million. Meanwhile, the labor force participation rate was a steady 62.7, and the employment population ratio increased to 60.2% from 60%. So overall, looks good, right? Now, I think the big problem, though, was this number here, non-farm payrolls number. So the U.S. economy added 254,000 jobs. That's a huge spike from most of the summer. So June, July, August, and we got this huge spike. Much higher than the upwardly revised 159,000 in August, and well above forecast of 140,000. This is pretty crazy. Pretty crazy. It is the strongest job growth in 6 months and higher than the average monthly gain of 203,000 over the prior 12 months. Employment continued to trend up in food services and drinking places. Oh, great. Restaurants and bars. Now, whenever you see restaurant and bars going up, that's a good leading indicator for the economy. So the first thing that dies are people going out to eat and out to drink. If people are just drinking at home, eating at home, more and more, that's a leading indicator right there. Healthcare up 45,000, government up 31,000. That's a big contributor. You see that, government? It's so easy for government to boost stuff, man. And healthcare is kind of pseudo government at this point. Both local and state. So we got 16 to 13K for that to add to that 31K, right? So that adds up to 31. Social assistance, 27,000, primarily in individual and family services, 21,000, and construction, 25,000. So that's pretty healthy. Employment declines, 7,000 in manufacturing. and was little change in mining, quarrying, and oil and gas extraction, wholesale trade, retail trade, transportation and warehousing, information, financial activities, professional and business services. Meanwhile, payrolls figures for July were revised up by 55,000 to 50 from 59,000 to 144,000. And oh man. So, usually the payrolls are revised down this year. So a lot of people are saying like Biden's juicing up the numbers. Well, this one, is it an inflection? And the change in for August was revised up by 17,000. Oh, okay. From 142K to 159K. With these revisions, employment in July and August combined is 72,000 higher. So this is the first time, right? We've seen higher revised employment. So before, everything was always getting lower because whatever they reported that month, the next month they were like, oh, we were wrong, we overcounted and chopped it down. So now we're increasing. What's the problem here, though? What's the problem here? This means that bonds are not liking that. And that's why on Friday, you saw bonds crash a little bit. You saw yields pump a lot. So let me show you what I mean. So this is TLT. TLT is the ETF for bonds, 20 to 30-year bonds. So that week, we went down 3%. Okay? Price is going down. So if you know bonds, price and yield are opposite each other. All right? So let me show you a 30-year yield here. 30-year yield went up 3.5%. So you see the inverse relationship between the price of a bond and the interest rate coupon that you get for a bond. So this is moving up from 4.1% to 4.2%. This is a huge move. We haven't overcome this area yet, this downward pressure. But what this tells me is that there's skepticism now that the Fed will cut as aggressively as they did. So inflation pressures are back in play, right? Hey, all seeing guy. Yeah, I am thinking of buying TMF next week. So yeah, I mean, the funny thing was that there was this I think during Fed Day 2 weeks ago, the JP Morgan guy on Bloomberg TV, when we were doing this 24-hour stream and we were showing the Bloomberg stuff, that guy was saying like, oh, it's a great time to buy bonds. It's a great time to buy bonds. When you ever hear anybody on Bloomberg or CNBC tell you to buy something or sell something at that point, it's too late. You missed the move, bruh. It's time to do the opposite of what you're saying. Because at that point, TLT already hit the resistance. All right. So, like, you see this? Like, bruh, you telling people to buy here? Nah, we already went over this is the second time we've been. All right, you think it's a breakout? I doubt it. I think it's got to pull back before we try it again. So that's what happened. So this line here is significant. Like anytime you move over there, you better be serious. You better be pumping, because this line's been held for quite a while. Because you see, in 2022, let me zoom in here. All in 2022, this was support, hit, 1 hit, 2 hits, 3 hits, 4 hits, 5 hits before it crashed. That's how you know when you look at a chart, this line's important. So if it's so important, let me just make it big, right? Make it 4 pixels then. So yeah, you hit it. Now you crash. You go back up here. You hit it just before New Year's, and then you fall back all the way back down. And then you hit it again, and you hit it again, right? Just before Powell. And that dude from JP Morgan was telling you to buy it again. Nah, man. Nah, that ain't gonna work. That ain't gonna work. So yeah, we're back at this support level. We're gonna see. Maybe it's time for me to move into bonds. buy some bonds here. Some 30-year. So this is interesting. Now, let me present some of the forecasts we have. Let me present some of the forecasts we have. So I hope you remember what I said about the ISM and all that unemployment stuff. Let's see what's going on here. Let's see what's going on here. So this is the probability of what the Fed's going to do in November 7th. November 7th. Keep that date in mind because that's 2 days after elections. All right. So the Fed's going to meet after the elections and will report on a Thursday, not Tuesday, Thursday, my bad. All right. Thursday. This is a report on Thursday. Tuesday is the election. Like hopefully that's clear. Now, our current rate is 475 to 500 basis points. So this is basis points, okay? That means if it's 500 basis points, that's 0.5% Fed funds rate, and this is 0.475. So 475 basis points. Now, this was the number, the probability on Friday. Let me zoom in. Be clear. Let's be clear. There's a 99% now that they cut 0.25. Okay. So 0.25%. All right. From this. So that's going to be a 25 basis point cut. I hope you understand what that means. So I'm going to take 500 minus 25 basis points is 475. 475 basis points minus 25 is 450. All right. Now, the day before, the probability was way different. There was still a chance. We had 32% that they would cut 2 times. They would cut 50 basis points. So 2 25 basis point cuts. A week ago, it was 53%. So what changed? What changed was the service PMI was a lot stronger. And then the employment data on Friday was even more bullish. So, when you have good news, it's okay. But sometimes you don't want to have too good of news. All right. So that would explain to me why the stock market wasn't that happy. It recovered what it lost because of the port strike, but it didn't make a new high. Because when you look at the bond market, it's telling you, not so fast, buddy. You still got a problem with inflation. So even if the economy looks good, it doesn't necessarily mean the stock market is looking good because you need the specific right conditions. It's like Goldilocks, not too hot, not too cold, just right. When you don't have the right mixture, you're not ready to go. Okay. So let's review, because if we look at the S&P 500, you see that all it did was recover what it lost because of that port strike. So it barely made, and I'll tell you this is why I think it's important for you guys to read a chart like this. Like every one of these candles, see, they have a spread. Okay. And now we have this spread right here from the top, a high to the low. But you see it open and close. The body of the candle is very thin. Okay. It didn't make any penetration to a new high. It just stayed here. So to me, that's not conclusive. Like I can't tell you that next week is going to be bullish from this candle. The way this looks, all it told me is like, well, all right, recovered it. But anything can happen next week just to make it fall down, because we haven't even touched anything in here. And if we look at the other index, the NASDAQ, you see it's even worse because it never even recovered all the way from where it dropped in September Tuesday. This was mainly because of the Micron earnings. And not only that, we're still far away from its high in July. So this is the leading indicator for AI. If you see the chips start moving at a higher rate, it should push this NASDAQ up, because if we look here, it's way low. This is even worse than the NASDAQ. So this thing I need to be convinced. If I want to see that S&P 500 go up, you better make this sector move up. It has a lot of room to move up. But if there's no news coming that will make it move, it can easily just fail again here. It'll just cup up. Next week, it'll hit here, and there's no new buyers to take it up even to this level, then we're just going to be moving down, because we're getting closer to the elections. So it's more the chances of bad news driving the stock market going down is a lot higher than any good news, right? The more we go to elections, the more uncertainty builds, and the market doesn't care who wins in the end as long as it's decided quickly. If we get into an election where no one can figure out who won the night of elections, that is no good, because you got 2 days into Powell. So remember that. You got elections, and then you got 2 days until Powell speaks. And if you can't figure out who's president the day after, the morning after election day, oh boy, anybody can say whatever they want in the news media to make the stocks go wild. So there's something going to be set up. Personally, I think what they're going to do now, because the port strike is over, we are going to have to make a new high. So I think because the semiconductors has a little more ways to go, I think the semiconductors can at least get up to here. So the SOXX at least gets to 252 or something like that. And then the NASDAQ can at least try to make a double top here at 503 next week. And then the week after, then we can go back down. All right. Yeah. Because that will be the options expiration week. So the third week of every month is options expiration. When the options have to be unwound, that's probably when it's going to happen. Yeah, that's it. It's very simple. But for me, I sold my oil positions. I was in oil from the Thursday Saudi thing. So let's see. This is here. Here, I sold the day before. I didn't bother risking it for Friday. So I already sold here at 36 about. So you can see my position there. I should have put more money into this. I didn't know they were just going to pump it right away with the Iran bullshit. Oh, man, I should have guessed they were going to do that, but whatever. So yeah, I mean, I would have put like 20, 50 G's on this position instead of just like 10. So all I got was like barely like 3,000. I was like, all right, 1 week's worth, whatever. I'm done. I'm pretty conservative about these things. So yeah, because I bought right here. that was when the Saudis said they were gonna pump as much oil as they could, because like it's probably because they heard China was like, oh, they're gonna doing stimulus. If they're gonna do stimulus, we're gonna risk it by pumping more oil because we'd rather have market share. So that's what I sold it here. Yeah. I mean, I'm not bearish on oil or anything. I'm not saying that, but for me, I can't hold it after I make a nearly 30% gain. You just can't with oil, especially. But long term is fine. Let me show you. So if you're in Chevron, if you're in Marathon, if you're in Occidental, all those companies, if you got a good price in them, you're fine. But be aware, oil is very volatile commodity, especially around election time. So you might be in some more pain. You better hold it. You better put something in your mouth to like freaking like a pacifier or whatever, because you never know, someone might fuck you in the ass, because they can do that. Let me try to find this. gold. Was it gold? It's somewhere. Man, I gotta get more organized. I'm so disorganized. House to gold. No, it wasn't that. Blah blah blah. That wasn't that one. No, no, no. Was it that one? Ugh, man. Yeah, I really gotta get more organized. Jesus. Keep forgetting. Yeah, none of these look familiar. I hope I didn't lose it. I think it's this one. Okay, let's see. Yeah, this is what I get when I called it unnamed. There we go. There we go. Here we go. Yeah. Crude oil follows gold shifted by 19 months. See, we're on an uptrend now. Uptrend. I mean, this is kind of so interesting in a way because, like, let me show this. All right. Let me, and then I'll hide it. Like, it's hilarious. Like, if you look at gold, like, did you think gold predicted like the the Ukraine and Russia thing? Because it looks like gold did. Gold moves up, and I shift it like 20 months, and then it predicts it. Like, oh, come on, that's too good. Like, some of this doesn't work very well. Like here, like you see oil's moving up, but gold is. Gold is kind of trying to say like, don't trust it. And then gold moves up towards the end of the quarter, and then this thing is just crashing. So yeah, it's not perfect. All right, this is just kind of a gauge, but for me, when you see this, it's like, oh, okay, this is an uptrend at least, right? At least we're moving to uptrend, sideways, and more uptrend. So the potential is there. Like if you look at this downtrend, you think oil will be going down, but oil only went sideways. So it doesn't necessarily mean it's going to go up or down in directional sense. It just means there are, think of it like sailing, right? You got the wind on your back or you got the wind in front of you. So it doesn't necessarily tell where you're going to go because all it tells you is like, are the conditions favorable? So you have to look at kind of like charting, and especially using like secondary indicators like this, because this is just a secondary indicator. This is nothing to do with the price. All it does, it tells you kind of, hey, is it a good time to sail to Tahiti right now or not? Because I could sail anytime I want, but it might just be rough going, right? So for me, when you see this, and then you see a later expansion in late 2025, this just tells me that, yeah, there's going to be a lot of inflation going into 2026, and oil is probably going to have a real big move in 2026, late 2025 into 2026. Right now, it's probably intermediary. I wouldn't say like oil is out of the woods yet. That's all I got to say about it. So if you're really thinking like, hey, all the oil stocks are about to rally and things like that, I don't know. This is probably more due to the China impulse, and we're going to hit resistance pretty soon on XOP. This is the ETF for oil and gas exploration. The other energy ETF is XLE. It's doing a little bit better because XLE contains more general energy producers. XOP is too specific and you see here we had an old top at September 2023. This top is pretty significant. We had 2 hits here, so now we're near it. That's why I sold. I'm like, I'm close enough. I got my money. I'm out. I'm not gonna risk it. That's about it. So it's up to you. Everybody has their own particularities, Trump will pump energy. Yeah, that's if he wins. Hey, what's up, Virgo? What's up? Yeah, I don't know what's going on over there on the other side. I got to wrap this up. We're about to hit the 2-hour mark. yeah. So hopefully I can get to my lesson today. Otherwise, I gotta push it into tomorrow. Let's see. Also, guys, you think Israel will say F it and bomb their oil refineries? I don't know. I don't know what's going on. I mean, I heard like Iran said they found some lithium in their place. So yeah. So yeah. So I mean, it's all up to you. All up to you guys. But all I gotta say is like timing in the oil companies is really crucial. A lot of times they move sideways, they go nowhere. It's not like tech companies. You have to understand where you are. You know, I mean, you get a rare time when things go pumping, 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 but it's always a reflexive move because once you hit that rally point, then you just drop because it follows a commodity, commodity. And since we're going to talk about commodities, let me look at natural gas. So this is what I have to pay attention to because I'm in Boyle, BOIL, the ETF. And you see here, natural gas keeps failing at this resistance area. Every time natural gas futures tries to get to $3 thermal British thermal unit, it's just like boom, crash, boom, crash. It just struggles. And it tried really hard to keep it around October 2023. But ever since it just like hits it, fails, hits it, fails. And so yesterday it hit it right 1 hour before the market opened, right? So futures was already open. It hits it and then it just dropped, completely failed. This is why commodities is such a pain. So when you see something like oil and gas companies, they're just going to have these jagged movements a lot of times because they just follow oil, and oil is a commodity, and commodities just are not pretty. Every time they have a move, they just move violently sometimes because when you hit something resistance, you hit right here, you hit just above 3, and you just say, F it, I'm just going to crash now. And that's all it does. It just completely collapses because when nobody sees any buyers up here, the sellers just move in quickly and just go sell, 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 sell. Because it's just something you just hate to own. And that's why boomers, they in the old days before Bitcoin, this is what boomers traded for volatility. They traded commodities, futures. This was their crypto in the 80s. And that's why when you looked at, like, you had movies like Trading Places, what did they talk about? They didn't talk about stocks. They talked about orange juice futures, frozen orange juice, right? That was the commodity they were trading. And that's where people made billions of dollars and lost it all or something like that just because of some stupid canned orange juice you put in the fridge. Like that's why, this was the instrument of choice back in the 80s, and it still is. This stuff is still very volatile type of stuff, and that's why owning oil companies is precarious because you are tied to this market, and that's why a lot of times they move and it makes no sense. And it doesn't have to make sense, honestly. It's just supply demand. If the Saudis want to pump or restrict their oil, it'll manipulate it, right? If the Chinese do something, it'll manipulate it. So everything is just so tied to the world that oil as a commodity is heavily controlled by interested parties because the market has to be dominated by someone. Now, let me give you this for natural gas before I go. Let's look at copper here. So copper is in this blue line, okay, or purple line. My bad. I'm colorblind today. You kind of see that it kind of follows it, right? It sort of does. It has some kind of correlation, perhaps. You see? And it kind of moves a little bit early. So when demand for copper goes up, then later on the demand for energy in natural gas moves up with it. So you could kind of see there's some leading. It might be a leading indicator. I'm not going to say one way or another. Now, let me put in Australian coal. So this is Newcastle coal. Newcastle coal is a big competitor for natural gas in China. Okay. So whenever China needs extra coal, they're going to get it from Australia. And that's why, there's a lot of political pressure in Australia to worry about China. Like before, Australians were worried about the Japanese. Now they're worried about Chinese. So there's the insatiable appetite for energy in mainland Asia. They're looking at Australia, which has a very low population, right? Anyhow, that's just something to think about. So you see this, it's more coincident. So that means the rise in coal more or less aligns with the rise and fall of natural gas. Now you have to remember, this is US natural gas. We don't have a big export market, but worldwide natural gas prices will affect eventually US natural gas. But natural gas in the US is primarily tied to the consumption in the United States. Now let's look at the Shanghai coal market. Let me hide these other two. Very volatile. So the Shanghai coal market, it roughly matches that. So it roughly matches how natural gas is moving now. So if I see the natural gas, coal, and all that being influenced by the Chinese stimulating again, so you see here, it made a new low, huh? I think I would be bullish on energy, lithium, uranium, natural gas, oil in the coming 2 years. Because if China's stimulating and the US economy isn't faltering, then I think you should be in a commodities. And the reason why is because commodities as a cycle, no, they're not. You just missed out on 100% move, Eric W. Yeah, if so you were listening to me last week. Yeah, so this is China right now. They were cooked if you listen to the media. Now they're not cooked because they are up here now. So from the low of August, that's a 45% gain in the Chinese 30 biggest stocks. And let's see, KWeb is the tech stocks. So tech stocks, so 54% gain in the tech companies in China within 1 week. So there you go. But who trusts the Chinese? Nobody trusts the Chinese. You just want to trade, right? You just want to make money. That's all you do. Trade is only on price, not what you believe in. Remember that. You trade on price, not what you believe price will be. It's what other people believe the price will be. That's the market. And you just trade on their impulses. So if they're buying like this, you just trade it. What I would say right now, though, is, so let me hide all this stuff. I don't think we need this anymore. So what I would say right now is I would be looking for a pullback. So this was my guess. I was being too pessimistic because it just blew right through this 3 lines right here. So China went all the way up to the resistance here. So this is the Wyckoff, okay? This is the Wyckoff chart. This is the model chart here. And you can see like it's building its base. So once we get the phase E, once it breaks out of here, we're going to go back all the way back to probably where we were when China started killing their stock market or whatever. And maybe even higher, maybe even to 2018's highs. I don't know. It's quite possible. I mean, if the US isn't going to collapse, then yeah, the China can pretty much pump whatever they want because it's their bubble. It's their bubble to pump. They can pump whatever they want. If they pump up, it's just like our bubble too, right? If we're pumping money into the system, everything rises. If they're pumping money into the system, everything rises. All it matters is liquidity. It doesn't matter what the actual value of something is. It just matters if money can flow. So you can just think of it like that. It's just a river of money. The only time it will do something wrong, right, is if there's some kind of event. So whenever there's a financial crisis like 2007 or whatever, you see liquidity being drained right out of the system. Once that happens, things fall because people are trying to cash out into dollars. So even at that point, I think gold went down too. So, you know, because you can only settle debts in cash, US dollars. And that's what they call the euro dollar system. I mean, I talked about the euro dollar system before, the milkshake. So when I first went here with John, I was talking about the euro dollar system, the milkshake theory, things like that. Maybe I got to talk about it again sometime. I don't know if I have time tonight. Yeah, we're already at 2 hours. I got to get to my lesson. We got to get to the lesson here. And we also, I didn't finish my news thing. I gotta, oh man, here. Okay, guys, let's go back to bonds. Like, I'm jumping around too much now. Like, I'm getting distracted. Bonds. Here, bonds. So this is the, oh my God. No. Oh, yeah. Let me get that again. I don't want to play the video again. I just want to play this. Here, okay. So these are probabilities. Probabilities right now is we're going to have a 25% basis point cut, another 25 in December. So only two 25%, 25 basis point cuts. That really is just going to leave us with a 50 basis point cut for the end of the year. It's not as aggressive as we had it before. So that's why the bond market is reflecting that. Now, that might change once we get closer to the elections. Okay, guys. And I'm going to present to you Jeffrey Gundlach's presentation here. So Jeffrey Gundlach, yes, because if Trump wins, then I would not buy Chinese stocks as a US-based investor. If you were based in Hong Kong or mainland China or even Taiwan, which I think allows you access to Hong Kong markets. So I know there's this dude, right? NPC something or another. He lives in Taiwan. He would be better off buying Chinese stocks directly. But if you were a US-based investor buying ADRs in the New York Stock Exchange and NASDAQ, then yeah, I would not be buying Chinese stocks that way if Trump wins. So just saying. But if you have access, you have a Chinese wife or something, go for it. Like, you can buy directly from in China. Anyway, let me see. I was gonna present a video. That's right. So this is Jeffrey Gundlach. Jeffrey Gundlach is the bond king. Okay.
Hi everyone, Dan Cassidy here. Welcome back to the UBS Market Moves podcast channel. Today, a special on-air exclusive Back to School on the Markets with Jeffrey Gundlach, the Chief Executive Officer, Chief Investment Officer, and founder of Double Line Capital. This conversation has become an annual tradition here on UBS Market Moves. Now, today's special conversation will cover a lot of ground across a wide range of timely macro topics that have been moving markets. earnings. This accounts for perspectives on the upcoming U.S. election, along with the course for the Fed's monetary policy, and we will spend some time covering positioning guidance across multiple asset classes. Though before we get started with our conversation, some background on our special guest. As mentioned, Jeffrey is the CEO, CIO, and founder of DoubleLine Capital. Jeffrey is recognized as an expert in bonds and other debt-related investments. In 2011, he appeared on the cover of Barron's as the new bond king. In 2012, Bloomberg Markets magazine named him as one of the 50 most influential. In 2013, Jeffrey was named Money Manager of the Year. In 2015, Bloomberg Markets magazine again named Jeffrey as one of the 50 most influential. Jeffrey is a graduate of Dartmouth College, summa cum laude, with degrees in mathematics and philosophy. So, Jeffrey, with that, it's great to be with you here today. Thank you for dropping by Market Moves to spend some time with our listeners and our clients, and do look forward to hearing your thinking on a wide range of topics that we will cover today with our listeners.
Very good. Nice to be here again.
So, Jeffrey, perhaps we can begin with the U.S. economy, the state of the economy as it stands today, as we're roughly a week out from the Fed having cut interest rates by 50 basis points, the first cut in 4 years. With that backdrop, what is your expectation for the trajectory of the U.S. economy? There has been a lot of talk, debate over the prospects for a soft landing. So, over the near term, how do you see economic conditions here in the U.S. evolving?
I think the economy is demonstrably weakening. You see that the unemployment rate, the U3 unemployment rate, is rising in a way that's quite convincing.
So you hear that? So I'm giving you someone who's bearish, who's macro bearish right now on the U.S. So this was made in September 25th, right? So that was before the recent data this week where you saw the ISM service and the unemployment rate. So he's bearish. He thinks and he's been bearish for quite a while. So this guy loves bonds. Yeah.
It's actually above its 36-month moving average, which is a very important indicator for us here at DoubleLine. We go on watch for weakening economy when the unemployment rate goes above its 1 year moving average, the 12-month moving average. But when you get above the 3 year moving average, the 36-month moving average, that has never failed to trigger a recession. And in fact, it's almost a bell ringing that you are at the doorstep of a recession. And there are other indicators that are very important and convincing in that same regard. The one is the yield curve, the Treasury yield curve. And we focus on the spread between the 2-year Treasury yield and the 10-year Treasury yield. And that had been inverted for a long time, about 2 years actually. And more recently, that now is de-inverted, and it's doing it virtually every day at this point. The 2-10 spread was negative 108 basis points earlier this year, so it was negative by.
You see, the problem is that obviously, of course, they're trying to slow down the economy, but every time the Fed has slowed down the economy, they caused a recession. So the market is trying to tease out, hey, is this time different? Did Jerome Powell engineer a miracle where we didn't crash land? Because this is like landing a plane, and the plane is not simple to land. It's the U.S. economy. Can you land the plane without crashing the economy and entering a recession? Because if you can do that, you will be hailed as a hero. You are that. I think, what was his name? The guy that landed the plane in the New York Sound or something. Sullivan. Is Jerome Powell going to be that man?
The 10-year was 108 basis points below the yield on the 2-year, and now it's at 20 basis points positive. And a lot of financial commentators get excited or nervous when they see the yield on the 10-year go below the yield on the 2-year. But it's that happening does not mean that you're imminently going to have economic weakness. It just means that you're on watch. But the key is that when it de-inverts, and that has happened in a way that is now convincing, it's not vacillating back and forth. It's now 20 basis points positive. that is another one of these indicators that is highly suggestive of a recession. And then another one, which was just reported today, is consumer confidence. And if you look at consumer confidence, it's interesting how there's two different measures. There's one of expectations for the future, and then there's one that is the current conditions of confidence for the consumer. And it's interesting that the normal situation is consumers are nervous about the future. They almost always have low expectations for the future relative to the present situation. But once the present situation confidence starts to fall, you start to see the pattern of a recession coming, and that's happening. So we had expectations of the future that were much worse than the evaluation of the present situation for the last 10 years. It's been that way. But now we're starting to see the view of the present situation deteriorating. And the pattern of the consumer confidence of the present situation looks eerily similar, I hate to say this, but looks eerily similar to the situation pre the global financial crisis. So we have to watch out for that. Finally, we have the employment situation on the supply-demand balance of labor, which Jay Powell talks about a lot. And he's quite correct in saying that the tremendous imbalance, there was so much demand for labor versus supply after the lockdown was in place, that's been relaxing now for the past 2 years plus. And it's now right back to where it was pre-pandemic, which he likes. He's encouraged by that. And that's one of the reasons why the Fed can cut interest rates, is because there's this labor supply-demand imbalance isn't so out of whack. But the problem is that I've been thinking about is that it's gone from tremendously out of balance with demand much more than supply, and now it's more in balance, but the trend has been relentless for the past 2.5 years. We've been seeing the increase in supply versus demand. And if that were to continue in line with the unemployment rate crossing its moving averages and the yield curve de-inverting and the leading economic indicators being negative now for a couple of years, it would seem that it's possible that the labor market will become more of a concern. And that's why the Fed has started cutting interest rates. They realize what these trends are. And I thought the most telling thing at last week's Fed meeting was that Jay Powell went off script briefly in his press conference Q&A, and he actually said there appears to be something artificial about the employment rate. He actually used the word artificial. And what he's talking about is that the establishment survey, which is the one that comes out the first Friday of every month, it keeps getting revised downward in the subsequent reports. So we get a lot of fanfare the first Friday of every month that, hey, big employment number again, and then they get revised down. In fact, for the most recent year, they were just revised down by 818,000 jobs. So almost 1 million jobs were revised.
Well, there you go. Except for this week's, we got revised up. So are we entering an inflection point? Anyway, so here's asking about like what should I listen to, this and that. This I don't personally subscribe to any podcast, and I always jump around to look whatever I want to because I try not to be biased. Everybody you listen to is biased. Your goal as an investor and trader is to be unbiased. Either you listen to a bunch of differing opinions or you just listen to nobody and just follow the charts. If you ask CKJ3, he doesn't follow any news. Doesn't care. You just follow the chart. That's it. If you listen to Denizen, he's probably going to say like the S&P 500 is designed to go up. It's going to be easy for me to decide because every time there's a dip, I figure out the levels, and later on, some good news will happen and it'll pump it right back up. That's his goal. So a lot of people trading, they will not listen to most of these things because everybody here has a bias. All these macro guys, they have a narrative to spin. They have a thesis they want to spin. It's good. It's nice. It sounds good. It strokes your ego. Your ego gets stroked whenever you're right. But the problem is like, sometimes you're just flat out wrong because your bias is wrong. And the market may move counterintuitively to whatever is in reality, because the market will look in the future. The market will also move based on expectations, not on reality. You're going to have to realize that very soon when you start trading and doing investing, because a lot of times I make money just because it just moves opposite what I think. And Jeffrey and a lot of these people, they have narratives, they like to do macro stuff. And I think his favorite two sectors right now is India and Mexico. Now, if you don't trust the Chinese, would you trust Mexico and India to take up the slack of China? This is a question, right? So he has a narrative to spin, Ray Dalio was bullish on China for the longest time until he gave up. Jeffrey Gunlock believes in Mexico and India because India is going to be one of those places that has a burgeoning middle class, and they don't have that population issue, that pesky demographic issue that China does, where they have a lot more males than females. People can't get married. A lot of other, where they have an aging population. India doesn't have that. So, and then you look at Mexico, they got the nearshoring. They have a lot of potential. Hey, Alcinga, I think you were in Argentina. So, how is that? What's your opinion on the new president doing so far? So that might be interesting topic of discussion, because it's close to use influence. I mean, that's it. That's what nearshoring is. But, is that still a good investment? There could be other investments that outperform India and Mexico. India is out. Yeah, I think that's the only ETF they got, ARGT. But yeah, that's a lot of the. So if you want to know about that, we'll see.
Out of existence. And when you look at the household survey, which is a different cut of looking at employment data, the household survey is typically more accurate at economic turning points. And the household survey year to date has negative job growth cumulatively. So for 8 months, we have lost jobs on the household survey. So I think the Fed's starting to understand this and plans on cutting interest rates. And the market has been extremely sensitive to the data on their view of the Fed. When we entered 2024, there were the expectation using the shape of the U.S. Treasury curve was that the Fed would cut rates 7 times in 2024. That looked kind of crazy once we just got into the later part of the first quarter, because to form, the CPI tends to have a spike early in the year. I don't think they do the seasonal adjustments very accurately, because the first quarter is almost always an inflation scare. And as we get later in the year, the CPI tends to be much lower than it is earlier in the year. So we went from 7 cuts expected, then we got the CPI scare, and all of a sudden, by mid-year, the market was talking about maybe 1 cut only in 2024. And suddenly now we've had 225 cuts in one day last week at that. And now the bond market is pricing for another 200 basis points-ish, at least 175 basis points of further rate cuts within the next 12 months. So we've gone into a very different environment where the inflation does not seem to be the problem for the next 6 months, far from it. We actually think it's going to be below 2% on the headline CPI by the end of the first quarter's February report that comes out in March. The problem seems to be that we're getting more concerned about the trends in the labor force. So this has led to a pretty rapid change in the shape of the yield curve and the predictions of the future. And for now, it's been supportive, because when the Fed starts cutting, usually you don't have full-on recession fears, but you have a cheering risk market because they're glad that the Fed is cutting the base rate, and so that don't fight the Fed is the old saying. And so we've seen with the cut last week, we've seen new highs get printed on the equity markets, the standard indices, and we've seen spreads which had widened on junk bonds and emerging market bonds and even investment grade bonds. They've stopped widening and have settled back down. So we're in this moment of calm as the market digests that 50 basis point cut.
Here at UBS.
All right, so you heard that. So it's kind of like the Ryan take, Ryan is always more pessimistic about these things. He sees like, oh, they're cutting 50 basis points. It's probably bad news. Economy is going to recession. So this kind of take here is the same in line. But as we saw in the recent data, doesn't look so bad now, does it? At least for the service side and unemployment. So only thing that's being damaged right now is the manufacturing. It seems like that is it. And now that we're cutting rates, at the very least, we're probably not going to do too much damage, hopefully. But everything's a lag. You raise interest rates, it takes time to work through the system. You lower interest rates, it takes time to work in the system. They might be still too late. Might be. We still might be in a recession by next year. I don't know. But I'm just leaving it to you in your mind to take into account everybody's opinions, because nobody's right in this game. Some guy might be right one year. Some guy might be completely wrong the next year. This is a hard game. Trading is already hard. Investing is already hard enough, let alone predicting macro scenarios with the economy. Economics is not settled science, guys. You can talk to 150 people and they just can't figure out left and right. It just doesn't work that way. It just doesn't work that way. These guys, they just can't figure shit out a lot of times. They'll all have differing opinions. Okay. So let's go back to the employment numbers. So he mentioned there were two different ways to measure the employment data. So I'm going to go over it with you now. This is pretty important to say. The diverging job numbers and which one is correct, by Julius Probst, PhD. Two surveys offer the primary insights into the labor market, but recently the job numbers they offer have been diverging. The labor market is the backbone of the U.S. economy, with more than 158 million employed workers. Understanding employment trends is not just crucial for understanding the economic outlook. It also helps recruiters to gain insights into their specific sectors and general hiring trends, whether it is currently easy or hard to find workers and at what cost. In the United States, two primary surveys provide insights into the labor market: the Payroll Establishment Survey, Current Employment Statistics, CES, and the Household Survey, Current Population Survey, CPS. Conducted by the Bureau of Labor Statistics, BLS, these monthly surveys differ significantly in their methodology, coverage, and the type of data they collect, yet both are essential for providing a comprehensive view of employment. Usually, these two surveys show similar trends, but as of last year, an extremely large gap has opened. The payroll survey shows a rapidly growing labor market with large employment gains, while the household survey shows job losses since the end of 2023. So the establishment data you see on this blue line, which is the payroll survey, that's what the stock market uses to move up or down. This purple one, the household survey, isn't used. So it's giving you a different picture. Now, does that mean that we're headed for a crash because, hey, the purple line is right and the blue line is incorrect? Well, I'll let you be the judge of that. It is therefore crucial to understand the differences between the two data surveys, what their respective strengths and weaknesses are, and which data point we should trust more to determine the labor market's actual performance right now. The payroll survey gathers data from approximately 119,000 businesses covering about 629,000 work sites. It focuses on employment hours and earnings of non farm payroll employees, offering detailed industry specific data on the number of jobs in the economy. In contrast, the household survey samples around 60,000 households. It measures the employment status of the civilian non institutional population age 16 and over. Here are the key differences. Survey populations. The payroll survey samples businesses and government establishments, while the household survey samples households. Jobs versus people. The payroll survey counts jobs, not workers. Multiple job holders will show up twice in the payroll survey, but only once in the household survey. Okay, that's important. Agriculture and self employed. The payroll survey does not include agricultural workers and self employed individuals, while the household survey includes both. Hmm. Informal and gig economy. Growth in informal or gig economy service jobs, right? You know, Uber, Lyft, DoorDash, shit like that. Is better captured by the household survey. Businesses, openings, closures, new businesses, and startups might be underrepresented in the payroll survey initially, but captured in the household survey as individuals report their employment status. Sample size and design. The payroll survey has a larger sample size and is less prone to sampling error, making it more stable month over month than the household survey. Well, they made a mistake in this one. Response accuracy. Self-reported data in the household survey can be subject to misreporting or misunderstanding of employment status, whereas payroll data is based on actual payroll records from employers. Population benchmarking. The payroll survey employment estimates are benchmarked to the employment insurance tax records. This yearly process anchors the payroll employment numbers to the comprehensive count of all non-farm payroll employment. The household survey a decade to the decennial census, resulting in a less precise employment measurement than the payroll survey. Okay. These differences in scopes and methodology therefore mean each survey captures unique aspects of the labor market, and occasionally their results may diverge. Economists rely on the household survey for metrics like unemployment rate, employment rate, participation rate, etc., to find it valuable for statistics on different subgroups of the population by age, gender, ethnicity. When it comes to monthly job creation and wage dynamics, economists usually rely on the payroll data. The larger sample size and smaller data revisions are part of the reason why. Net migration is a challenge for household surveys. Since the payroll survey counts jobs instead of workers, some have argued that job growth is only so high because workers need to have two jobs to get by. However, labor market data shows that the percentage of multiple job holders is historically low. That's counterintuitive. You would think it would be higher. The main reason why the household survey may be off is due to the surge in migration that the U.S. experienced in 2023. In a press conference earlier this year, Fed Chair Jerome Powell acknowledged that the U.S. labor market and economy were booming thanks to an increase in labor supply driven by immigrants. There is a precedent for the household survey to underestimate job growth. In the late 1990s, illegal immigration into the U.S. surged during a time when the economy was doing great and the labor market was booming, not unlike today. Back then, a big gap emerged between the payroll survey and household survey estimates for job growth. After the 2000 census captured the immigration increase, the BLS concluded that the employment based on the household survey was understated by 1.6 million people. If that sounds familiar, it's because we are facing a similar situation right now. The census data shows a 0.5% increase in the U.S. population for 2023, while the CBO, Congressional Budget Office, economists have estimated that the true number might be closer to 1%. They believe that the U.S. received about 3.3 million migrants on a net basis last year. So I think that pretty much sums it up. You see now that we have a repeat of the 90s. Now, if we have a repeat of the 90s with all this immigration, let me tell you this. That means the stock market probably is going to go up. And if you're worried about deficits, I can give you this article now from McClellan. We got McClellan here. And I think I'll have to save the other stuff for tomorrow. I have so many things, but I think it's better to leave it for tomorrow. I think this article you'll find very interesting. Deficits are horrible, but they are bullish. Deficits are bullish, budget surpluses are bearish. Interesting. So it's good to be in a deficit if you're in the stock market, I guess. Is that what this is trying to say? The final stats are in for fiscal year 2024, and the federal debt in the U.S. grew by $2.297 trillion versus a year earlier. And as of September 30th, 2024, the total debt stood at $35.465 trillion. Those who are fans of the fine print will note that on the very next day, October 1st, 2024, the total debt jumped by another $204 billion, or 8.9% of last year's debt increase, as the folks at the Treasury Department unleashed a bunch of bill payments that they held back to make 2024 look better, fiscal year 2024. So that's another reason why you got to believe in Jewish New Year's. Jewish New Year's starts at the end of the fiscal year. So September is the end of the fiscal year. October is the beginning of the next fiscal year, all right? There you go. It is further worth noting that this increase in the total federal debt is larger than the stated federal year deficit, because Uncle Sam's bookkeepers do funny things with how they account for such things. The final numbers on taxes and spending for fiscal year 24 are not out yet, but as of the end of August 2024, the trailing 12-month deficit was only $2.063 trillion, which is a lot lower than the change in the total debt. Having such a large and increasing debt load is a really bad thing for our grandchildren to someday have to pay back, but it is a wonderful thing for stock market investors because deficits are bullish. In the rare instances when Congress has suffered from a bout of responsibility, trying to bring down the debt has been bearish for stock prices. I have highlighted some examples in this week's chart above. So this is why I tell you guys, news is news. Sometimes good news is bad for the stocks, and sometimes bad news is good for stocks. This is why you have to be really careful. You don't want good news to be too good, maybe. Maybe sometimes you don't want bad news to be too bad. But in either case, it might be counterintuitive as to how things run, because the stock market doesn't necessarily reflect what's in Main Street, right? So that's right. Yeah, you actually had it the worst. I mean, COVID was pretty extreme. Yeah. I mean, yeah, and even then, bad news was always good because because you hit a bottom, you can't get any worse at some point. And then even if you keep coming out with bad news, it's like, well, it's not as bad as expected. So everything moves up because all that matters is liquidity. Once they initiate the money printer, it's over. You got the money printer moving. Why do you care? Move up, move up, move up. So let's continue with the article. Episode 1 was around right after the September 1929 peak for the stock market. Banks were folding, and both President Hoover and the Congress figured out that the federal government ought to conserve its resources ahead of an impending economic slowdown. So in both 1929 and 1930, there were budget surpluses. Economist John Maynard Keynes later won fame for writing about how this was the wrong approach to take in the face of an economic slowdown. Oh, ho, ho. Keynes, Keynes, Keynes. Well, there you go. Pump money, print money. That's the way to do it. Stimulate, stimulate, stimulate. So if bad news is around, no problem. Just stimulate your way out of it, right? Episode 2 came after World War II had finished, and Congress decided it was time to pay back a lot of those war bonds, which Hollywood stars had helped promote the sale of during the war. The total debt peaked on an annual basis in 1946 at $269 billion, which was 118.3% of GDP that year. It fell for the next 2 years, dropping to $252 billion by 1948, which was 92.6% of GDP. But when Congress could not keep up the debt payments, they went back to their old ways, which was fortunate for stock investors. So, I mean, overall, you got this episode here, you recovered, and you got this, and then you said, like, oh, let's pump it up again. Okay, recover. But I think overall, outside of these examples, you can read this yourself. I'll put all the links towards the end of this presentation. I'll just put it all then. I think what's really important is this gold chart here. Okay, so let me read this part. I mention all of this because as investors, we should pay attention to what future Congresses and presidents do with our tax money. If they keep running up the debt to even higher levels, that will compound the problems for future generations, but it will be bullish for stocks. And deficits are also really bullish for gold too. So, someone in the other 24-hour chat, was asking, what's the ETF for reparations? So if blacks get reparations, what's that? That's just another government spending program, isn't it? So I said the ETF for reparations was gold. Look at this article. What is it saying? Deficits are also really bullish for gold too. So you can look at this red line here, 12-month federal deficit as a percent of GDP. And look at the gold chart. Every time it has an impulse in this federal deficit, boom, gold goes up. Boom, gold goes up. Let's see what's doing now. If we have, I don't think Trump is going to be very conservative about the fiscal policy, right? He wasn't last time. So Trump or Kamala, whoever wins, doesn't matter. I think gold is going up, baby. This chart looks at the reported deficit as opposed to the actual change in total debt, and it is expressed as a percentage of GDP. When the deficit is rising, that tends to be really bullish for gold prices. Conversely, a period when the deficit is still positive but getting smaller has been a tough condition for gold prices to do well. The price low in 2001 had this factor pushing down gold prices. Okay, let's see. 2001, you see that? This supposed surplus was just a counting gimmick. Okay. Is that Bill Clinton? Is that what did he did? Oh. the price low had this factor including putting. Oh, okay. He was talking about the Bank of England. All right, and that was compounded by the Bank of England in 1999 to 2001, deciding that there was not much point in holding onto their large hoard of gold. And so they were making regular sales of as much as 25 tons a month back then. Gold prices bottomed below $260 an ounce. And gold is now worth 10 times that amount. I bet the BOE honchos, who may still be alive, are regretting that move. The reason why all of this is important now is that we have a big election coming up in 1 month. I won't pretend to tell anyone how to vote. If you are reading this, you are smart enough to make your own decisions, and no one is going to be swayed anyway by what I might say about who to vote for. But I will suggest that everyone who is an investor should be prepared for what might come after the election, as the next Congress and the next president work to grapple, or not, with the size of the U.S. total federal debt. Their decisions will have a big impact on what stock prices and gold prices are likely to do in the years ahead. A rising debt load is a horrible thing, but it is a bullish thing. And trying to pay down the debt is a bearish thing. All right, that's good to know. Yeah, I saw that. All right, I saw that. Costco sells physical gold. Yeah, I saw that. My mom's got a ton of coins and shit. I got her to over the summer. She just dumped all the junk jewelry, gold spares, scraps, any kind of gold scraps, sold it. Because they were, you know, they were paying pretty much the same. There was actually no discount. You were selling at no discount and you were buying at no premium almost at some places because they were desperate to offload or buy from you and shit like that. It was crazy. The liquidity is so high. If you see very little spread between premium and discount, that means there's a lot of people buying and selling per day at those jewelry stores. So, just go to your Chinese or Vietnamese jewelry store. Go over there, see what the prices are. They'll buy and sell as long as it's like it has to be 0.9999 finest for a gold. If you're trying to do silver, you're not gonna get it in no Asian places. You're gonna have to figure out another way to offload silver if you're planning to sell it. But silver still hasn't reached its apex yet. It's gonna fly pretty soon. But try to avoid the IRS. Do whatever you can. That's all I gotta say about that. Not financial advice. Yeah, don't freaking kill me, IRS. Yeah, anyway. Let's go to the lesson of the day. Let me do the lesson of the day. I think I want to talk about candlesticks a little bit more. It's such a basic thing, but I think people take things for granted. I mean, I wanted to talk about Bitcoin, but I'm gonna leave it for tomorrow. Yeah, I don't think I can do it tonight. That's just too much content for one night. Let me find it. Candlestick. Okay. Let's go. Let's do some basic knowledge stuff while we still have some time left. I don't want this thing to go overrun too much over 3 hours. All right, here we go. I think I could do this one. Yeah. All right, blue collar investor. Let's see. So this is a line chart. I think you guys understand that. Pretty simple. You just take the closing price of every day or whatever your time frame is, and that gives you a line. Now, what's a candlestick? Candlestick, you have a body here. This is a body, the rectangle, okay? You have an opening price. So stock market opens 9:30 Eastern, closes 4 p.m. Eastern. So that's your open, that's your close. So if you're doing daily candles, that's what it is. And it gives you a hollow candle or a green candle, okay? This is not colored, but usually a green candle or hollow candle means that it moved up. So the candle is positive. You'll also have a low and a high. Okay, that's the highest price it ever touched during the day, and the lowest price it touched during the day. And that gives you the wick. All right. So that's the wick. So this is the body, that's the wick. Sometimes they'll call it a shadow. So a shadow can be called a wick as well, okay, of that candle. Now, if your open is higher than your close, you open at 9:30 at this price and you close lower, then it becomes a black candle or a red candle. So you see usually green or red, so this will be red. And the same thing, high and low, that's a wick or shadow. That's what they call it. Okay, you'll look like this, see? Now, let's look at a bar. Sometimes you'll see charts that have this kind of bar line stick type thing. Okay, it's not a candle. It's one line. You got the high and the low of the day, and then you have something sticking out to the left. That's your open. And you have something sticking out to the right. That's a close. Now, sometimes they don't even talk about the open. They might just have one line and one thing sticking out to the left, to the right, and that's the close. So sometimes you have that. So that's pretty old school sometimes, I think that's about it. Now, the reason I brought that up is because I'm going to show you this video here of how a Wyckoff person would look at a chart. Okay. Let me find that video for you.
Where is demand coming in? Bar number 1, bar number 2, bar number 3, bar number 4, bar number 5, bar number 6, 7, and 8. Oh, there are quite a few. Okay, so let's just go through this. Bar number 1, demand is coming in, not holding really well, still suggesting continuation. The supply tail on this one is more than the demand tail. So still supply is winning. Bar number 2, most definitely demand is coming in now. Volume is increasing, demand is coming in, we have demand tail, and the price holds in that upper part. So here we're thinking, okay, we're gonna rally from here. How do we rally? Bar number 3, diminishing demand. Bar number 4, even more diminishing demand into the area of the resistance, suggesting another reaction. We react. Bar number 5, we try to stop again, kind of equivalent of bar number 2, but it doesn't show the same close. It's a little bit lower, and the spread is a little bit smaller. So still to the downside. And then bar number 6 is kind of like crucial bar. So here on Friday, expiration day, we're seeing how demand is coming in, and we are producing a much better demand tail than anything that we've seen before. And then at the same time, supply tail is starting to diminish. So this is the first bar where demand is expanding. So bar number 6. Demand is expanding, and we see how the upward result on the demand tail relative to the supply tail is expanding as well. So therefore, how would we call this? Synchronicity, right? We're seeing that synchronicity between effort and the result. Then confirmation follows. Bar number 7, demand is diminishing, suggesting reaction. And what kind of reaction do we have today? Doesn't really come to the low of bar number 6, and then demand tail again into the upper part of that bar. And we have a slight increase in the volume signature here. So demand is slightly increasing and pushing the price into the more favorable close. So do you see the whole sequence now? Right? Effort is increasing, result is increasing, bullish or bearish? Bullish. So from both sides, we're expecting a rally. From the side of the selling and from the side of the demand. Okay, now that we're seeing this short-term picture and we know how the reversal should happen, overcome this 1/2, have a bar like this, intrude as much as possible.
So I think that gives you a little taste, a little flavor. Like when you're looking at the Wyckoff stuff, they take analyzing candles and bars day by day very seriously. They look at the volume, they look at how the shape is. I think I'll cover this again tomorrow. I think that's a very important lesson. I'll try to cover the quartz thing, so the quartz mines in tomorrow, and I'll cover Bitcoin tomorrow. So that's the stuff I did not get to yet. And then I'll end it with cycles. So also learning about cycles. So a lot of the stuff I try to do right now in this month, I'll try to cover as many topics as I can. Interlace it with whatever news is current, to keep you interested. But by the end of this month, it's just going to be more about lessons. And what I'll do every week is cover certain stock tickers and ETFs and make some model portfolios, I guess, and we'll see what we can do. Everyone's a little different. So everyone has different life goals. I'll try to make it as general as possible. And from there, we're going to do something nice with that. Yeah. Okay, let's bring up All Seeing Guy. What's up, All Seeing Guy?
Oh, hey man, how you doing?
Hey, what's up?
Yeah, I'm just listening. My computer, I have so many damn tabs open, and my computer's so full. I gotta erase stuff to make space, and it glitches. It's a fairly new computer too.
Yeah, I mean, memory. You never get enough memory. You'll never get enough memory. That's just how it is, because everything's a memory.
I have to get more external hard drives and just get rid of shit.
Yeah,
that's how it goes. I just accumulate shit.
Well, the problem is you don't even have time to look over the stuff you even saved.
Yeah, exactly. Yeah, I'm like, good. I'm good for accumulating this, but then I never look at it.
Yeah, I have tons of crap either. I'll never look at it again probably in my whole lifetime. I'm sure I don't have time
because I forget. I freaking
No, it's terrible. It's terrible. It's how it is.
Yeah, you're giving some good information on these podcasts. I'm glad you're doing it, man.
Yeah, I mean, I have a lot of crap stored in my head. It's just like I've accumulated so much knowledge, and it's probably worse than the hard drives I have. It's just
yeah.
I remember I would read something, I would be like, damn, I swear to God, I have an article for this 10 years ago somewhere. And I'm just like, I'm not gonna be bothered to find it. It's over. Doesn't matter.
And as
Doesn't
you get
matter.
older, as people on this John's panel have talked about before, you just offload stuff because your old brain can't hold it all anymore. For instance, I used to know each year, decade through decade, what was good and what was bad as far as modern music. Now I just don't give a shit because I think it all sucks. You know, like that's gone. It's gone.
No, I've gone to the point where I'm just like, I'm just tossing any trash out in my head because there's no point in trying to, unless you think that if we live long enough, we can be downloaded into AI, and you know,
that's fucking nuts, man. That's no life. Whatever they think they're doing, man. What the hell is that? Like,
well, the problem is you see what we're doing here on YouTube. Google is recording all of us. They could make AI models of people, right? And I remember when people had the social media accounts at the beginning, there were some people, some families that wanted to resurrect a digital copy of someone they loved through the social
I can
media
understand
posts.
that. Yeah, I can
But that's
understand that.
creepy
Totally.
as shit.
I know, but it's just the memory, the longing, something, you know, like.
I think this is.
But I mean, what I'm thinking about is like, you know, these billionaires. Some billionaires are like they think they're going to live forever by like uploading their
That's
consciousness.
exactly the problem, man. Especially with the baby blood and all this other stuff. And there is, I think, a lot of the newer rich class now. They don't want to die. That's why the 23andMe stuff happened. It was because, you know, their family had a lot of history of genetic disorders because, you know, they're small hat.
It would also help if they didn't create like a climate on the planet Earth where like you're likely to die of like war or like immigrant invasion or you know, like all this
they're not interested in
chaos.
that. They're the new pharaohs, man. So the thing is that they don't want to die. This new generation, these new crop of people, they definitely don't.
But they're creating the conditions for death, except they're so rich, I guess they can avoid it no matter how chaotic it is.
That's the point. You are the slave helping them. Yeah, you are the little hoi polloi, as they would say. And you will help them, serve them into the afterlife like the pharaohs did, right?
Yeah, it's pretty crazy. I mean, I found myself saying at a dog park talking about a new movie in 2005 called Elysium. I'm like, that's
I love that movie. That movie, I love. I know it's a stupid movie. People hate that, but I loved it because it's exactly what's happening, right?
Yeah.
With the healthcare and shit.
Except for the actual floating space thing yet, but maybe they already have that damn.
Yeah. And the rail guns and I like that.
Man, rail guns, I don't know, they might actually exist because did you remember that it was like 3 years ago maybe? There was this explosion in Lebanon, I think, in Beirut. This fucking explosion just happened, and there's no one talked about it might happen beforehand, and no one understood what happened, and it was insane. Like, it just hit Beirut. Do you remember that thing? It wasn't a nuclear, it wasn't a lot of smoke or anything. It was crazy, and it destroyed their grain silos, so their food reserves for the country and shit. And that was like maybe 3, 4, 5, something like that, man.
Yeah. I mean, it's always something, I'm sure, because the U.S. and China have been testing it. I mean, that will just kind of revive the battleships. You know, once you get rail guns, you can kind of do battleship stuff again. Yeah, and you can just shoot everyone like 250 miles away, right? That's the range.
Yeah, railguns. The thing, they shoot a bolt. It doesn't even have any munitions on it. It's just the speed of it.
It's just cheap. You just send a stick of metal at someone. That's all it is. It's just
exactly.
So it's such a cheap weapon. But the problem, I guess, people would have is like, oh, you can't change the direction once it's in flight, this and that. But since the munitions are so cheap, you could just if the railgun is efficient enough, you could just spray and pray, right? You could just keep spraying and praying. And it's
Yeah.
like, who gives a fuck?
Like a giant metal hot dog.
Mhm.
Man, but I didn't hear anything after that. That just went away in the news. But still, if you look up, I don't know if you heard about that. About 5 years ago, max, I think, maybe 6. I don't know. I can't remember. But this explosion right in the port of Beirut, Lebanon, it just freaking wrecked everything. Like, and it was no explanation for it.
Oh yeah,
Just
I think
happened.
Momo remembers it. He said it was ammonium nitrate stores and okay, I kind of remember. It was the port, right? And then someone said
Yeah.
they had some like volatile compounds and it blew up. Yeah, all right. I don't know. Yeah, blah blah blah.
Yeah, it was nuts. It was crazy ass explosion, and it didn't look normal. Like anyone, like a layman didn't know about like the weapons, would be like, what the fuck would happen there? Like,
Yeah, so that reminds me, fertilizer.
they blamed it on like fertilizer or storage or some shit. They said, oh, it was because they stored fertilizer, which is explosives wrong, and that they said that's what caused the explosion. But it looked like an attack. I mean, I don't.
Yeah, I think that just reminds me about fertilizer stocks because wheat and most of the grains commodities have been going down. So, and natural gas has been so cheap. But once natural gas goes up, I would be looking into fertilizer stocks. Yeah.
Yeah, right now you're looking at fertilizer stocks.
Yeah, there's a lot of them.
Are you right now?
I don't know.
Yeah,
I haven't looked. I looked at them in 2021 when they had the Russia-Ukraine started heating up. That was an easy because when natural gas started going up, that was easy, and also because I think Ukraine has a large capacity for potash or some crap like that.
Yeah,
Ukraine has a lot of crap.
Yeah, I was looking then too because when they cut off the Nord Stream pipeline, somebody blew it up, probably us or NATO or but. Because fertilizers or not fertilizer, I mean, natural gas is needed to make world food production scale fertilizer. Like you can't do that with bone meal or anything. You can do local with bone meal or something, but like you need natural gas to make world scale.
Oh yeah, people really don't understand without like modern fertilizer and pesticides, you can't have the crop yields we have now, and we're totally dependent on Monsanto and all these other companies, for everything.
Yeah, basically, since that discovery was made that you can make mass food production fertilizer you had to use natural gas. Before that discovery, we were half back to agrarian. And then once they made that discovery, we got all modern, like the modern world you see today, man.
Yeah, it's insanity. I think if we have a famine situation again, it's gonna look like a nightmare.
Yeah, there's some smart people worrying about stuff like that.
I mean, to me, that makes sense. If I was an elite, if I wanted to kill people after I'm done with them, like I don't need you guys no more. I would just engineer a famine. Honestly, that would just be the easiest way.
Yeah, well, that's how they think. The elites
Yeah,
that are currently alive
I would think
right
like
now.
that. I would think like that if I was up there. Yeah, that's just how it is. I mean, the thing though is like you have to understand, like that's why I hate all this like negativity stuff. Like, oh man, you can't beat the stock market, you can't do this and that. And like, dude, does an ant think like that? Does a roach think like that? Like we own the earth, right?
Yeah, I mean,
but the ants and roaches still annoy us, right? They still come back.
Yeah, and since I began trading, I had my ideals and everything, but like I start to think like, okay, well, so Google is violating they're helping the government violate my privacy rights, all these big tech companies, but I might as well fucking make money off them while they're doing it.
Right.
At least because they're not going to stop doing it.
Exactly. So yeah, you kind of have to put your personal beliefs aside and your whatever like morale, like questionable morals about this or that, because at the end of the day, it doesn't matter now. Like the system is
And
so
if I
entrenched.
invest in a company, it doesn't mean I support them and are like fine with what they're doing. It just means I think they're going to go up, like they're going to make me some money. And
Right.
if I don't do it, it's somebody else. It's just like drug dealing in the hood or something, man. Like if you don't do it, somebody else will.
That's
Yeah.
true. It's unsavory at that, but it's not that bad, I guess, in some ways. The drug, but still.
But I don't even understand anything enough to be like, I'm a real villain in this, man. I'm just freaking going along for the ride.
It doesn't matter because you are such a little drip in the pond, like a little nothing. You are nothing because everyone's 401ks and pension plans and all that are driving everything. Nothing with you. Yeah. So unless you yell and be like everyone's to stop supporting 401ks and stuff like that, that ain't happening. Stop your pensions, right? That ain't happening.
I mentioned I invested in Meta on some pod stream and they freaking started screaming at me like, you're investing in what's destroying us all. Yeah.
You might as well invest in cigarettes. Maybe they'll take it to better.
I made a lot of money in Philip Morris.
Oh, yeah.
I got to look at that. I think that's going down right now, actually. So I think I sold some out of it. I got to keep watching that.
So,
hey, man, I got to take a piss. I realize I'm the only one on here, but sorry, I'll be right back.
All right, yeah. Yeah, that's right. You got to stick to the body of a whale. So, and Eric W. saying like, oh, civil unrest is bad for the elites, dude. Yeah, you don't know the real elites, though. They've already been planning. Why you think Elon keeps trying to go to Mars and shit? There's different levels of existence, There's definitely different levels of existence. So let me show this again. So I think we talked about this before. Libertarian ocean colonies. All right. So Peter Thiel, makes a down payment on this fancy dream, right? Let's go to the ocean. If a small team of Silicon Valley millionaires get their way, in a few years, you could have a new option for global citizenship, a permanent quasi-sovereign nation floating in international waters. Tired of the United States and the other 190-odd nations on the earth? Oh, you don't want to pay taxes anymore? If a small team of Silicon Valley millionaires get their way, in a few years, you could have a new option. All right. A permanent quasi-sovereign nation floating in international waters. With a $500,000 donation from PayPal founder Peter Thiel. Oh, Peter Thiel, our favorite guy, right? Oh, Palantir. I forgot to talk about Palantir. Palantir made a new high this week. Got to talk about Palantir. Let me see. Talk about Palantir. I forgot to mention Palantir. Oh,
damn! I hope they drop for some reason so I can get more shares, man.
No, baby, yeah, it's 40. Oh yeah, I remember when I was talking about Palantir on John Galt's one cat was saying like, it's a meme stock. It's a meme stock. Is it a meme
That's
stock
what the
now,
analysts
bitch?
thought. These analysts thought that like last 2 months ago.
That's what they're called, analysts. They're called analysts because they're analysts. They just anally rate the retailer for listening to them. That's just what it is.
It was like 2 months ago. All of them, like categorically, were like, "This is just the Palantir." Oh my god!
Who's saying it was a meme? I don't know. It was some guy in chat. I don't think he ever showed his face again. Maybe it was an analyst trying to dissuade you from listening to me.
I just hope something crazy happens and they drop a lot so I can buy bunch more shares, man. That's all.
Yeah, I don't know. I mean, I'm probably gonna sell before later in October, because usually, as I said, October is not a good month, especially before. So, you should be thinking about dumping it. That's
My
just how it
highest price
goes.
share is $15, so I'm just gonna keep it. I just wanted to hopefully go below
All
that.
right,
So
all right, all right. Up to you. Everyone has their own way. Yeah, so that's about it for that. I mean, any other questions you had?
Oh, me? No, not right now.
Not right now. Okay.
There's some other people on here. When I went to the bathroom, I heard other voices. I don't know what happened.
No. It was just me reading an article about the Peter Thiel homesteading. Because Eric W was like, "Oh, civil unrest is not good for the elites, man. You know where the elites can hide." You remember that story where like the elites were going into like New Zealand and stuff? They were buying up, like Obama had a house there, everyone had a house there, something like that.
Yeah, elites have been buying underground bunkers
These robust
for a
figures
while
run
now here.
counter to the
Yeah, they are. They have been.
What do you think of Zuck's transformation and how he said Trump was so cool when how he reacted to being shot? You know?
Yeah, I don't know about that. That was weird. Like, people were making so much fun of him. Like, he was like, "Why is he trying to act cool now? He's trying to be hip with the kids." Like, huh?
I think it's like a transformation. I think he might have woke up somewhat or something. He was fucking so robot nerd before. Now he looks. He it's almost like he blossomed or something. I mean, still, I think he's a robot, so I'm not going to trust it. But it seems like he's loosening up a lot.
So tropes want me to look at the filings for Peter Thiel. Like, he sold shares. Now, I'll tell you this: insiders will sell shares for any reason, for tax purposes or anything like that. They'll have to get money to pay for something. So you can't rely on this stuff. Now, if you really want to look at insider trade, you should look at this website. Let me see if I can remember what it was called.
Can you link that here? Or I'll
Yeah.
just type it and show it.
Yeah, I'll just put it in. I mean, that's why insider trading is like it's too late too. You get this information way too late, and it doesn't matter. I mean, he
And they
sold it.
arrested. Go ahead. Yeah, go ahead.
Yeah, I mean, like, look at the time he sold it. Like, it still went up, right?
Yeah, they
So if you-
arrested some retail schmuck for like following what Pelosi trades. They arrested
Why?
him. It was somewhere.
That's not illegal. What?
Yeah, but it's what's happening these days. These kind of non-crime, like thought crime shit going on. But I mean, he was in the eastern United States. Some guy that followed Pelosi's, and they found he was doing that on the internet. He's following the Pelosi trades.
Do you have a link
they
for that?
arrested him. I don't know. Maybe. I don't have it search.
I mean, you should send it over to Portia to I mean, because she had like the whole.
If you just web search a guy arrested for following Pelosi trades.
I mean, I don't see how that's illegal. What the fuck?
Yeah, but I mean, they're arrested. There's this whole push globally. It's this total like kind of communist shit that's like the New World Order turns out to be like communism on steroids with modern technology, and which is where they go hard on soft crime or soft on hard crime and hard on soft crime or made up crime like thought crimes, hate speech, shit like that, free speech, you know, and so that guy. Yeah, it's not. I do that too, though, man. I look at that stuff, and I've bought a couple shares of a couple things based on what I heard the Pelosi's were doing, you know, and it worked out pretty well for me. But I mean, Jesus Christ, man, that's not a sophisticated strategy or anything.
Yeah, I don't know. Oh my God. Yeah, I can't find nothing unless it was like what. mean, that's ridiculous because everyone can follow them. It's just, what the hell is the point?
I know. That
No,
is
there's no
what is
way you can get
ridiculous about
arrested. The only way you get arrested if you got that information before they release it to the SEC. Because if Pelosi has to release it to the SEC and you got it a day beforehand for some reason, then that might be illegal. But otherwise, there's nothing illegal.
There were actually news articles on it, and I think they put him in jail. Like he was jailed for a period of time for this. That's why I'm telling you. It was like, what the fuck is going on?
Yeah, you gotta find a link for me then. I can't find nothing. I'm just getting spam with all kinds of other crap. All right, so if you want to see insider trading, use this website, openinsider.com. Okay.
All right.
And you can look at the ticker and you can have a whole database of who sold when. I don't need to waste my time on the SEC website. I can clearly see who sold how many shares, what time, how many percent they own, what percentage of they still own, this and that. So this is a better website. Use that. Okay, guys. There you go. That's the website you should be using. Now, whether it means anything, I don't know. That's up to you to decide.
Yes, some of these I based on what people in government are doing. I looked at one of these type of sites. What are the insiders doing in government? It said by Leidos or Leidos. You've heard of that? I don't know, but I did, and I was like, okay, they're doing it for a reason. I bought some, it made some money, then it dropped, and I was like, I'm not going to sell totally out of it because it didn't like spank me too much,
Right.
So I kept a couple shares, and it's kind of going up, and it looks like kind of promising. So I'm staying in it. Leidos, I think it's LDOS. Has something to do with military. It has something to do with the defense industry, I think.
I see. Yeah, the chart looks good. I see nothing wrong with it so far this year.
Okay, openinsider.com. Here it is. Okay, so this is it. All right, thanks, man.
Yeah, so this is a pretty good website. You can search any ticker and you'll see all the insider trades reported to the SEC. So yeah, that's it. And if you're looking for Nancy Pelosi and all the other congressmen, yeah, you can use this website. It's unusualwhales.com in politics. So I usually use that.
Yeah, I do like watching what these whales do and these people.
I mean, it's up to you. But the problem is it's like it's so delayed that like I usually don't try to.
Yeah, that is the problem. Yeah. How delayed is it, do you think? On the average?
I mean, the
delayed?
SEC doesn't require them to report within 45 days. So they can wait until the 45th day to file their report. You see what I'm saying? So 45 days is like a lifetime in trading, right?
Yeah.
It's over.
Yeah.
Like even 1 day or 2 days might be over. You might have missed the window to buy at that price. So then what's the point of buying at a higher? Yeah, you're getting more risk.
That. I understand that, but with Leidos, it's one of those things. I'm like, maybe they're looking long term.
Yeah, it's up to you because that's why you shouldn't rely only on Nancy Pelosi, whatever. You got to do your own research. You got to do your own shit. It's just like, and you have to be willing to take. Okay, is this price still worth it? Yeah, that's the problem.
And maybe even our corrupt politicians are capable of looking long term and thinking investment.
Well, I think the reason why Pelosi does the best out of all the congressmen, because you have to look at the other congressmen too. They don't perform as well as her, and the reason why is that her bills usually get passed. You get what I'm saying? So it's not really insider. It's just because she's so good at politicking, whatever she stuffs in a bill gets through, right?
Yeah.
Okay. So she's just investing in whatever she's promoting already. And because she's so good at getting those laws passed, it's like whatever companies benefit from that new law being passed. Right? Get what I'm saying?
Yeah,
so that's why when you look at the other congressmen, they can't do well because they suck. They just suck at like stuffing bills, making fat omnibuses, and doing whatever. No, they just are crap at being politicians. That's just
Yeah,
the
I mean,
real reason.
when I think insider, I just think foreknowledge. You know,
Yeah, it is kind of a foreknowledge, but it's also like it's because she's just so good at doing the lobbying, all this. It's just like she's just the part of the machine, you know. When you look at like
Yeah.
someone like AOC, what is AOC trading? Probably crap that will never go anywhere because she's just a newbie,
God, she's
right?
dumb, man.
Yeah, so that's
Yeah.
the problem. Yeah, so.
Man, remember? Did you see that picture of her wearing that dress that had written in like red paint on the side, down the side of it, "Eat the rich"? Did you see that picture of her? What the fucking hell, man? a rich commie that tries to get richer, pretend she's for the people. You know,
So anyway, I got these websites. You can copy them. So so Tropes put that website in the back chat. So I'm gonna put that up. Yeah. So.
All right, man. Thanks, man. This is nuts, man. I was just thinking. I only know how to like look up what Pelosi was buying. The Pelosi's were buying. Like this is everybody.
Yeah.
So
So
thanks.
you got tons. There's so many of these websites. Yeah. So keep them in mind if you need to follow things. Yeah. It's good to have. And Tropes is talking about the NANC ETF, so that's what it does. I mean, there's a ETF for Inverse and Pro Kramer. You heard of that one? Yeah. So
no, but you mentioned something a long time ago that I want to write this down, man. If you can remember when I asked you about it, it was you bought for your parents. I heard you say when the AI mania started happening, or like
you just use Sox L. That's what
it was like a multiple
okay
tech and Nvidia type shit, you know.
So you can I only use this one. Let me get that. Shoot.
I don't know when the next one of those is going to happen, but I do believe in AI and like chips and blah blah blah. I mean,
but the problem is, I think the hardware phase of the boom is done for stocks. It's time to look at software, stock for AI, and this is a problem. A lot of them are private. You saw that. I was playing those videos and stuff. It's like OpenAI is private. Like unless you buy Microsoft stock, which is not exciting to own, right?
Right now that's going down. I have some red shares in that, man. I'm like kind of watching.
Yeah, that's the
right
problem.
now.
You can't extract out the AI from the rest of the Microsoft business. See, so you're not gonna be able to get the value from that owning that. That's the problem. So, but.
Yes. What do you think about Microsoft in the near future? Like, I mean, are they gonna? I mean, I want to just not have all red shares because I was up.
Yeah, I don't know.
Years,
I don't know. Yeah, I don't know. I mean, let me see. How is Microsoft doing now? Yeah, I see. It's kind of stuck in a sideways now. Yeah, I see.
And if it goes like freak lower, I'll buy some. But like, I just want to even sort of for now.
It doesn't look very strong anymore. So the stock I used is a Sox L because I'm lazy. I don't do options. So this one is 3 times the semiconductors. So you have to be aware though. Yeah, but
what is it?
You see that's like you have to avoid all these downturns, So
I know with those leverage like up like 3 times shit, you got to be perfect. Get in there.
You gotta be pretty. You don't have to be super perfect, but you can't be too sloppy either. Like that's why I don't do the bearish ones, because the bearish ones, when you're shorting, you have to time the top pretty well. You can't just be goofing off and be like, I short here, I short here, I short here, I short. Like that's retarded.
I don't even know how to. I've never learned yet how to short or put. I don't even I've heard of them a million times. I don't even have it.
Yes, shorting. you have to get a margin account, and what you do is you have to borrow the shares to short, and you have to pay an interest, right, every month because you're
I'm a
borrowing.
caveman. I just try to buy low and sell high.
Yeah, so
Caveman
that's the
style,
problem.
man.
So that's why when you're shorting, you also have to take into account like how long am I shorting? If I'm shorting for 2 months, 3 months, well, I have to take into account that I'm paying the bank what percentage of the amount like if I put $10,000 and it's the like the APY is like 8%, like guess what, bro? That ain't cheap, right? I better be sure that the short is gonna be successful at a certain level, right? So if I'm shorting the semiconductors, I better be timing it pretty damn well. I gotta be timing up here, shorting it down here within 1 month because I don't want to pay the bank any more money than like that's the problem with that. Then the other way is to use options, right? You buy a put or you sell a call. And that's also time dependent because then you have to make sure, oh, you have the strike price correct. And that's the problem.
Fuck all that. I suck at time management.
Yeah. So if you can't time it good, I wouldn't bother shorting shit because most people just suck at it. And it's just better to buy dips and ride it up because that's just how it goes.
For a while, you're hearing about people trying to short Nvidia and Palantir and getting like wrecked. It was like every day,
they will show because a bubble can last forever. You're like, what? Can you time a bubble? Like, look at all the people doing like the Chinese stocks the past week. They kept trying to. That's why the Chinese stocks went all the way up to that resistance level, is because I'm sure they kept short every day. They were like, oh, it's got to go down from here. It's got to go down from here. It's every day, and it just kept going up 5%, up another. Dude, if you saw the S&P 500 going up 5% every other day, that's just wild, bro. That just never happened.
I'm glad those assholes got wrecked, man.
So it's just like, yeah, that's why shorting is a. But the thing is, like, I probably, when you saw these two candles on the daily, this one, and then when it went another high, and then you saw this other candle, you probably would have been like, yeah, I'm ready to short. And when it did this drop here, you probably would have been salivating because you were like, get ready, short. And then you would have covered down here and here. Yeah, because at that point you hit those levels. So, but it's just a dangerous game because you could get wrecked because you would get fooled. You do this, and the next day it would just pop back up and just blow you out.
That kind of risk it break my life, man.
Yeah. So, yeah. So that's just how it is. I don't know. You can't.
My financial institution sent me this like almost a year or two ago, sent me a letter like said, we've identified you as a pattern trader.
Oh,
whatever the hell that
okay.
Like,
and what do you have to do?
I mean, I was like, okay,
you have to take a
about
course. Right. Do you have to like?
No,
what do you
for me, I was like, okay, you've identified me as a guy that tries to buy low and sell high. Is what you've identified me as.
I mean,
like,
I don't know. It depends because I think. Oh, let me see. Pattern trader. I mean, because it's probably because they have to follow some SEC rule.
But I'm pretty like a doe in the fucking woods, man. I just started kind of, and I'm
just. All right. So, did they say you were a pattern day trader? No.
Yeah. Well, same thing. A trader. They said just trader, but I mean, I don't do anything complicated. I do it in the day. Yeah.
Okay, yeah, that's FINRA. That's a FINRA problem then. Yeah, okay, so
I don't even know why they felt they had to identify me and tell me about it. I mean, I don't know why they.
So the only way the reason they would identify you is because you have less than 25,000 in your account. Is that true?
That's not true. No.
That's not true? Then I don't know why they would even bother with that. So yeah, I don't think it matters. I don't know what that means then. The only reason the government will care if you have less than 25,000.
That's the government making them say that, or like tell me that?
Because all the stuff it comes from the government. It's a FINRA rule, it's a SEC rule, or it's a CFTC rule.
I don't know why they even told me that. I'm like, okay, good, pattern trader, whatever. Yeah.
But there's no requirement. You don't have to do something.
Yeah, it's just hey, guess what? We think so and so, man. That's
What
it.
brokerage do you use?
Okay.
What brokerage is this?
Schwab.
Oh, yeah, maybe just Schwab because they're boomer, so then they don't. Yeah, I mean, Fidelity, Schwab, probably the same shit. They probably because they don't like anyone.
Yeah, I saw some video just the other day that showed all the financial institutions and what political party they contribute to, and Schwab was one of the only ones that contributed mostly to conservatives, like 95%
yeah.
conservative.
I mean, because Fidelity, Schwab, those guys, those brokerages, they're pretty conservative in the sense that they don't like people trading too much. That's why TD Ameritrade when TD Ameritrade got bought out. That's why everyone got mad. So you have that. Now, the other problem too is if you have a brokerage account in a bank. So if you got Merrill Lynch, Wells Fargo, whatever, all these things, like those big guys even hate you even more. They will not allow you to do certain things. They won't even allow you to buy certain instruments because they consider it too risky. So that's why I recommend people to have multiple brokerage accounts. You need to have one Robinhood because Robinhood, even though it's not really trustworthy, they let you buy and sell whatever the fuck you want at whatever time you want. Then you have a Fidelity account because in case Robinhood blocks you from trading, at least you have a Fidelity account. But Fidelity, they're boomer, so they might hate you for over trading or exactly as you say. Charles Schwab, just because they have the Thinkorswim platform, so a lot of people might like the platform. So that's an alternative to Fidelity.
Oh man, when a few years ago I bought a ton of physical silver and I kind of panicked and I thought the world was going crazy. After COVID, the market went way up and I was like, all right, it's all back to good.
Yeah.
Then it shot back down again. I was like, okay, fuck this. The world is getting so unstable. I'm gonna get out of just the system, so I bought a lot of physical silver. I have it stored in a vault, and when I did that, they were hostile as shit to me. My Schwab, they were almost like mafia. Like they got this guy on there, it sounded like a mafioso, like trying to be like, yo, like just give me shit about withdrawing that much money out of my account and buying physical silver. Well, I was like,
no, you can't trust them. No, you shouldn't. If you plan to withdraw, you better do it in small increments every month. If you're planning something, that's how it is. Like when I withdraw from my bank, I just withdraw a few thousand every other week or something like that. And if I dump money into it, it's every other week. You just can't do big. No way. The government will flag you or the bank will hate you. Either one, it doesn't matter. It's just like that's
both. The government.
It's not your money. You look at the bill, just like Imperia said, right? What does the bill say? Federal Reserve note. That's not your money.
Yeah.
That ain't your money, bro.
I love it. To me, I'm just like, I'm trying to survive. Fuck everyone.
No, I'm sorry. You are in the thumb of the system, so you have to act accordingly. That's what I think a lot of people don't understand. Asians and other immigrants, they distrust banks. So that's why my mom, always had that attitude, and I inherited that attitude. I never trusted them. And the problem is I see a lot of Americans, oh, it's my money. I should trust them. With what's the problem with carrying cash like a large amount? No. You are an enemy. You are suspicious, right? You are a criminal until proven otherwise. You ain't innocent. So that's really a problem.
I'm like, huh.
Yeah, exactly.
I'm just picking out this system. I'm like, oh, maybe it is.
Yeah. So I had this coworker, he was Greek, and he told me his parents, they hid money in the between their walls. When you come from countries where the banking system is untrustworthy, the government is untrustworthy. Yeah, and you already have this attitude where you don't trust them. But in America, it's so funny. It's like, bro, the banks and government have fucked you in the ass for how long? And you still gladly smile and be like, I trust them. Holy shit. You have been brainwashed. You know, and
Yeah, I
you
did
shouldn't
that
trust them.
because I don't trust. I don't
Yeah,
trust
yeah.
any.
But you got to be careful. You said don't give away your intentions. You know, you gotta be. Yeah, if you're planning
I guess
big
I just did. I
withdrawals,
just said what.
yeah, you shouldn't have said that either. Nah, that ain't good. Fucking. Oh yeah. All right. Yeah. So anybody who's listening to this, do not say what your intent is. Don't. Yeah, they're all those employees are told to be like, oh, let's
It
flag
wasn't
this
that.
guy.
What I said. I mean, what it did wasn't that I don't trust the government. Is I just don't trust the system. Like the
Yeah,
state of
that's
the.
bad enough. That's bad enough already. Nah,
Yes.
you
Yeah.
belong in the
I mean,
plantation, buddy. Now,
yeah. All I was doing was noticing. I was just merely noticing.
Yeah, exactly. Don't notice, but yeah, Sox L is yeah. So this is, I think I updated my my parents' positions from time to time because they're the most conservative. I think that they have the most like kind of, man, I can't paste on here. What the heck is going on? Oh my god. Hello. Oh man, so annoying. So this was what it was last week. If I can paste it. It's too large. All right, fine. I guess the image is too large. Ugh. God, I have to reduce the resolution or something. Jesus Christ. Okay, here we go. So, yeah, I traded it twice. So this was what I had on Friday before I sold half. So yeah, I
Hawaii
mean,
stock.
yeah.
Wow.
Yeah, so this is Hawaiian Electric. That's one of the utilities. It's just a dumb play. I mean, I traded it. I remember when I was on here in John Galt's, and I told him to buy here, short here. I didn't short, but I was just saying if you wanted
Are they
to.
going to try to do? Are they doing any AI shit in Hawaii?
No. It's just because of wildfire. Because it's a bankrupting, it's a bankrupt lawsuit company. So you're just trading. So you got here.
So you did that way back then.
No. It's just it was just recently. This was in July.
Oh, okay.
So it was like it bounced back up above here. So I said, like, I think when I was John Goltz, I was like, buy here, and then it just zoomed up to here, and I was like, oh fuck it, short here. I was joking. I was kind of joking about shorting here because it just hit resistance.
Yeah, that's a crazy ass move.
But it was a good move because if you shorted here and held, it's like like if you shorted the next day, like sold the next, like covered the next day, it's okay. But I guess if you were a really hardcore shorter, you just held it and you were like, I don't give a fuck. I want the full shebang. So they just, you could have kept short. You could have held that short all the way to this week. I bought here. Man. So I bought it
quite
again.
A lot of these things recently, these jump ups like just like that angle. You know, I've seen quite a few recently.
Yeah, I mean, yeah, it's tough. It's tough. You can't. Yeah, you can't really. I mean, if I was like so good and I could time all that shit, yeah. I mean, come on, I wouldn't even bother like doing anything.
Yeah,
except making a hedge fund at this point. Or I don't know. I'm too lazy actually. I probably wouldn't. I'll be like, I got my money.
I'm like a simpleton babe in the woods. I can't even believe that I've done as good as I have so far.
It's easy. It's not hard. It's not hard. You just need to follow the rules, follow the game. You follow the whales. Doesn't matter. That's how it is. But yeah. So when I did Sox L, I bought here. I bought a little here, right on this area. It still dropped. I bought a little more here. And then when it did this, I bought a shitload. And then once it started climbing back up, you start unwinding. You start selling a little bit, and then you dump the rest. Because here, you know, that's pretty much where resistance is again. You see that before it dropped again? And it probably was an event. I'm pretty sure there was an event that I didn't want to play because if you're conservative, you always sell before some big event like that. So it probably was something happened. And then after that, you wait for it to drop and it goes back to the same area. You go like buy here, buy here. You see these, and then now you go up, right? And you start going like I sold half here because it hit the same area. You drop down, I reloaded a little bit. It went up here, and I'm like, hey, we're getting into October. I'm being conservative. I'm just gonna sell all the stuff I bought here again. So I'm holding some for my parents that I bought down here because it's already so low that I'm willing to take the chance it could go up. But if it does drop to here again, I'm selling the rest of it. Get what I'm saying? Yeah. So
Yeah.
So it's kind of like a lot of the trading is like you just can't really predict the future really well. All it is just planning out like if I buy here and I am wrong, how much more will I buy at a certain level because I'm going to expect it to climb back up anyway. You know what I'm saying? It's kind of like that. That's all you're doing. You're just trying to risk management type of thing. Because obviously, it could have went up from here. You don't know, but you know that it's potentially could have went lower because the way the chart looks. Because if you look here, it's pretty simple, right? You see this is a major high here, major high. So when it start on that Friday, that's the bad part. During that week when it was like trying to sort itself out, this was a Friday. When you end at a bad Friday, you have to assume it could be a worse Monday because the news media has 2 days where you can't trade. So you can pump out as much bad news as you can Saturday, Sunday. So when the boomer wakes up Monday morning and they see the stock market open down here, they're going to panic sell, right? And that's when you move into buy.
I wrote down a SOX L, but this is SOX XX. Is this different?
This is what it's based on. SOX L is 3 times the daily movement of SOX X. Yeah.
Okay, it's more than SOX XX.
Yeah. So it's trying to replicate it every day. Yeah, it's leveraged.
Okay.
And that's why you see it's not perfect, right? Because when you look at SOX L, it's not going to be really 3 times over because you see that like SOX X, you should be close to the same price as you were in July 24th up here. But when you look at SOX L, you see that it's way lower because there is a decay. So when you own a leverage instrument, you got to time it right and get the F out. Because like if you hold it for too long, you're gonna see this decay. Because anytime it starts moving sideways, up and down, because when you go up 5% and you lose 5%, that's not the equivalent, is it? Right? Because you have to go up more than 5%. You have to go up more than 5% if you lost 5%, right? You have to go like 5.2%.
I think I might understand this, even though I don't, because almost every day I buy at least 5 or 10 shares of SQQQ for the tech, and I sell them at the end of the day. I always sell them at the very end of the day, and usually I'm just like, I make $4 or lose 30 cents. It's like, yeah, it's one of those.
Yeah. It's one of those things. That's right. Yeah, and also because they also have fees, right? So these ETFs are not cheap. They're up to 1% at least in some cases that you have to pay over the year, right? So that might eat away at it.
Yeah, I don't know if you saw my thing. My tax. I use a CPA for taxes because I ended up trading so damn frequently that there's no way I could do it myself.
See, that's why I don't trade that much. Because if I traded too much, I would have to require a CPA. Yeah.
They handed me a phone book size stack.
Oh, I'll bet they did. I'll bet they did, didn't they? Everything is a line item.
Yeah. I'm like, well, at least they did it, and it was worth my money because I couldn't do that myself. Fuck that.
No way you could do that. So that's why I don't overtrade. I don't try to Yeah, I don't know. Do you feel it's worth it? It's everybody is up to them. It's their individual taste.
I don't know, man. I don't know if I feel. I think I'm just to me, I'm just hanging on by the seat of my pants, man. I'm just like, all right, man.
Yeah.
As far as legality issues, I'm like, at least I got them to do it, so they can't blame me and put me in jail for making a simple mistake, which I would have made like 20 of them. You know, like,
Yep. Yeah, I mean, it's really a personal thing. Everyone's different. You see Dennison, he does options, he trades every day, he scalps every day, CKJ3. And CKJ3 uses futures. Futures has such a good benefit when you use your own money because 60% of what you sell is treated as long-term, 30% short-term. So it doesn't matter how long you hold a futures position. So
yeah, I
if
mean,
you
I've heard about
overtrade,
options of future. And
I
wish
think
knew
I
that.
think mostly futures that happens. I don't know options. It's certain options that has that tax treatment, not all.
Yeah,
Okay.
both those things are some things I have to learn, but I'm just so like bogged down with other shit I have to deal with.
Yeah,
It sucks.
futures will be easier for you to learn because it doesn't have a time element. It's just like stocks. But the thing with futures is that one contract is equivalent to like maybe 10 or 100 like points. So that means you have an instant leverage. Get what I'm saying? So even like you trade something like the S&P 500, if it moves like 0.01% or like 5 points in like that might be a lot of money, right? So you kind of have to be careful, like oh shit, you just can't be lazy about your trading. You just can't be saying like, oh, I know what to do. Yeah.
Every day I feel like I have to be careful with every one of my stocks, man. So it's like I don't know if that's
I'm not that person. I allow stocks to do whatever they want. If a stock drops, I don't care too much as long as it hits my goals, because my goals are always over a month to a quarter when I do my trades. So I don't really care for the day-to-day too much unless it has.
Yeah.
So I think I'll discuss this more later on. It'll depend on people's.
My goal is long-term investing, but I do trade every day just because that's how I've gotten whatever gains I've gotten, since I began doing it.
Oh, okay. So you really don't try to keep it easy. You're gonna try to make as much capital as you can trading. Okay.
Well, I mean, yeah, I'm trying not to. I don't want to lose a bunch of. I'm trying to gain slowly.
It's
I don't
hard.
care if
It's a hard
slow.
game.
Yeah.
It's a hard game. That ain't easy. That's for sure. That ain't easy. All right, that's good enough. I think. Yeah, tomorrow I'll cover Bitcoin and.
Should I feel like a retard because I don't know how to do options and all this like shit? Like,
I'm lazy. I'm lazy, but I think even if you don't do options, I would probably say you will have to learn how to read an options chain, because that's a secondary indicator. Okay, because you have to understand options expire the third week Friday. So the
what's
third.
that other thing? Forex, right?
Oh, you mean there's
Forex?
A Forex?
No,
You mean the ETF?
but not options. Forex. That other thing you said, like,
No, that's 3X. That's the 3X. Like, so that's the ETF, the SOX L.
Yeah, I mean, man, I just buy low and sell high. I'm a simple man.
Well, the thing is, because even if you don't do options, you gotta look at option chains, because sometimes that gives you an idea of where a stock is gonna move, because people place their bets. People place their bets every quarter, every month, and you'll see it. Maybe, unless it's just a bunch of noise. Through the option
like when
chains.
you're looking at
Dennison.
the chart and there's these red and green lines off to the side, it's like this is.
And a lot of it is driven by the options. So if you know how to read those options like better, you probably have a better idea of what's going on, rather than just be looking at because it's kind of like the tail wags the dog, because options are considered derivatives. All right. And we're at the point where derivatives are larger than the whole market. actual real market, like shares. Yeah, so let me find this. I think I showed this one time before.
I mean, all I know is tomorrow I'm going to spend like the entire day poring over every one of my positions and how many shares I have, like the limit buys, trim that or not, depending on what, you know.
So you do it every week. You look at everything.
Every day, you know,
Man,
like
I mean, I don't know. Damn, you yeah. Look, damn, I mean, I don't know. Maybe you're just overextended with too many positions at
I
once.
think
And
so, man.
yeah, I mean, you gotta. So that's why you gotta have a system where you're gonna automate it. Because if you can have something that scans through charts, you can automatically tell, like, hey, watch this one, watch that one. Hey, watch out for this one, that one. This is where I'm trying to get at, because I think AI, since AI is getting so good at looking at images, chart is an image. I think AI could automatically do a lot of that work for you in the end.
Yeah, I would love to learn that. I'm just eyeballing it, man.
Yeah, that's just too much work. If you're doing so many positions, yeah, and without like a team of people, yeah, you're putting a lot of effort for how much gain you're getting. It depends. That's really the problem.
Yeah, I mean, honestly surprised that I've stayed afloat this long.
Yeah, it's really hard.
I think I just got lucky because I got into that tech media. Like, I mean, I got out of shit that I shouldn't have got out of and panicked, but then I was like, oh shit, I panicked, got it out at the wrong time, so I just immediately reinvested it. And when I reinvested it, it was during that tech mania, and I put all my shit into the tech mania, and then I made it back. Yeah, and they've been floating since there, man.
Okay, found it. All right, I'll show this before we end the stream. This is something that a lot of people
The
probably
AI
should
mania.
know.
I meant to say the AI mania, not the tech mania, but that.
That's the
You
same
remember
shit.
that?
No, it's the same shit.
Yeah. Yeah, you remember that though? Like AI, everybody had to say AI every like 50 times every time they had a conference call, man. Like, yeah.
So all the world's money and markets in one visualization. Okay, and let's see what it is. What is it? Silver. That little square there. Crypto. 3 little squares over there. Military spending. All right. Budget deficit. No. 2 rows of squares. Coins, banknotes. All right. Fed balance sheet. 3-4 rows of squares. Billionaires. 4 rows of squares. Gold. More than billionaires, at least. Fortune 500. Well, you see the big 5 companies: Microsoft, Apple, Amazon, Alphabet, Facebook. Now we got to look at the stock market. Okay. Tons of squares, huh? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, probably like about 25 rows of these squares. Now look at the money supply. Oh, all right. Probably equivalent to the stock market. Global debt. Oh, way more than the stock market for sure. At least 2 to 3 times. How about the global real estate? Oh, real estate and much more. Global wealth. Oh, there we go. Now here we go. Derivatives. What's a derivative? A derivative is a contract between 2 or more parties that derives its value from the performance of an underlying asset, index, or entity. So what's an example of a derivative? A call option. A call option, eh? What else? Warrants, swaps, forward contracts, future contracts. Now, if you look at this, like, bruh, how big is this shit? You see that?
Yeah, whatever it is, man. I see
So
it.
that's why, it's a you talking about derivative. you think like it's something based on the actual thing. So what's actual? The actual stock, right?
I've
if I
heard
buy
of derivatives before. They're not actual. They caused a lot of turmoil in this.
So what are derivatives? Options, futures. So all the things you don't want to do, all-seeing guy, is actually what's driving the market because it's now larger than the actual real stock market. So this derivative,
that's what I've heard.
so that's why I said like you have to learn it anyway, even if you're not using it.
We know.
You have to.
I heard about this shit. I heard about this shit like 10 years ago. It's getting worse. Are you saying it's even worse now?
Well, this visualization is out of date. This was only made in 2020 May, so I'm sure it's worse now after COVID-19 and all the deficit spending we had.
Yeah, man.
I'm sure all of it's gone into options and futures trading. So yeah.
So it's like super hyper speculation, just every which way.
All it does is that all I have to say is that you have to learn it, because even if you're not trading it, you gotta learn it, because this is what's driving futures. You still gotta learn it. Currency, forex, you still gotta learn it, because like the Japanese yen caused a huge like drop, right, in the whole global stock market. Like all this stuff you think you don't need to know, you still need to know, because that's what drives your stock in the end.
Yeah,
all these
I don't even know I don't need to know this stuff.
That's the problem, and that's what we're trying to do here. That's what we're trying to do here, because the whole reason I'm here is to teach you guys these things, because that's exactly it. Even if I don't know much of these things, I know at least about them, and you can research it on your own. Yeah, that's the important part. All right, man. It's almost 4 hours. I think we went long enough. I'll see you on the 24-hour stream if you're over there. I don't know if I'm going to be over there. Maybe I'll just go to sleep. It's only 9 o'clock my time, though, so probably not too bad. Play some music. Some fruity music. No copyright. There you go. And tomorrow, I'll try to come back. We'll look at some Bitcoin. Bitcoin's pretty good, pretty important. And let me see, what else was I gonna cover? I was covering. Oh yeah, the quartz.
Correct.
I gotta get to the quartz.
Oh yeah. Go ahead.
Yeah, the quartz. Was there something else? Oh man, whatever. I'll remember it later. I'm sure I had something else to talk about. You have any requests? Any requests? Maybe I should cover silver again. I don't know.
Not only do I have physical silver in a vault, but I have shares of SLV silver.
Oh, you gotta change that to a P silver. Well, I mean, it depends on if you care about the long-term tax treatment. Let me show this stuff.
I don't really care because I have physical silver in a vault. So the stock shit, I was just taking advantage of the freaking uprising.
Yeah, but you gotta if you're holding more than a year and you want to get the tax advantage from it, you gotta use PSIL, SLV, the Sprott.
Okay.
Yeah.
Wait, SLV, right? SLV.
That's PSLV.
PSLV. Okay.
Yeah, you need to know, because if you're you otherwise you're going under the collectibles tax, and then you have to pay like your ass out of that. That's why a lot of people don't know taxes, man.
A stock is
it's not a stock because it follows gold. Yeah, because it follows gold. Gold and silver are collectibles. Yes.
I thought collectibles were only like not gold bar, silver bar, just weight stuff, but like printed coins with designs on them, shit like that. I thought that was like
sorry.
Shit.
You better look up. You better look up your. You better look up your tax codes, man. They make sure you pay taxes, bro.
Oh my god, man. Nightmare. Fucking nightmare.
Yep. That's why you need a tax lawyer, a tax everything.
Otherwise, CPA and a lawyer, but like
CPA is not good enough. You need a tax lawyer too at this point. Because the CPA doesn't anticipate. You need a tax lawyer to anticipate. The CPA just does all the bitch work after you're done with your taxes. That's the problem. You get what I'm saying now?
Damn, I can't afford a fucking tax lawyer.
Well, then you better keep listening to this show because I'm gonna tell you how to do it because this is what it is. You gotta look up collectibles tax.
I don't want to have to sell all my shit at a loss, so I gotta keep listening. I guess.
Yeah. See, and even I'm not an expert. I just know about these things, but you know, I might not like know everything though. So. You still gotta contact a professional.
My professionals cut me off when I sold a lot of my stocks and to buy a lot of silver.
Okay, let me find this. Maybe I'll talk about this again next stream too. So, Sprott Silver Physical Trust right here, PSLV. Blah, they got the fees and expenses. I think I want to look at the tax resources. You gotta fill out some forms too, and there's a whole bunch of forms to fill out. See, the Sprott Physical Bullion Trust potentially provide favorable tax advantages versus owning metals directly or precious metals ETFs. So tax treatment if held over 1 year. So if you're holding gold and silver for more than 1 year, you usually are subject to 28% tax rate. That's nearly 30% they're going to rip you off on. But if you own the Sprott Physical Bullion Trust ETFs, you just get 15% or 20%, depending on what your income is, right? It depends on your income. So that puts you on the tax brackets of 15 or 20. But you see the big difference there, right? That's why you do Pokemon cards, baseball cards, arts, Sotheby's auctions. You're going to get taxed up the ass unless you lie. So if you buy and sell silver or gold, make sure it's not reported. Don't use your credit card or something like that. There you go. Yeah, the IRS is really going to start hating me now for saying these things. All right, any questions, all-seeing guy? Did you get that?
No, I just returned from the bathroom.
Oh, you missed that thing?
Yes.
Okay. Okay, I'm putting in the chat then. So you can look up that. I'll probably cover it again. But you see that Sprott Physical Bullion Trust potentially provide favorable tax advantages versus owning metals directly or precious metal ETFs. So tax treatment if held over 1 year, you just get taxed 15 or 20% based on your tax bracket, right? That's capital gains. Now, if you use the other ETFs or you just buy and sell silver and gold directly, you are subject to 28%. Now, if you're buying and selling silver from a place, I don't know if they report you to the IRS. If they don't, you're safe. If they do, you better report it, or Uncle Sam's gonna wreck your asshole for not paying that 28%. So, yeah. No, tropes. You just sell. You get taxed on the event. So when you sell, that's when you get taxed. So if you held it for 3 years and sold it, that's just 30%. It's not 30 every year. Now, unless Harris becomes president and then the Democrats somehow do unrealized taxation, that's when you just do, okay, they can tax you whatever they want. That's what it is, all right? Yeah. So Pokemon cards, baseball cards, everything, 28%, man. You have a Ming Dynasty vase you're going to sell. That's 28%. There you go. But that's only if it's reported to the IRS. If it's not, then it doesn't matter. But if you're selling and buying the normal ETFs, yeah, you're going to get taxed at 28%. So that's why I recommend if you're buying ETFs and you're holding it for more than a year, you buy PSIL, PSLV for silver, and gold is PHYS, platinum, palladium, SPPP. There you go. Also, uranium, they have some shares there too. So talk with your tax advisors. This is what you gotta know. And if you buy these ETFs, you better fill out the forms correctly. Don't fill out the forms correctly, you might not get your benefit. They got so many forms here. Look at that crap. IRS form 8621. Oh God. I hate doing taxes, man. I do all my shit myself. That's why it's so painful. I just want to blow my brains out. Yeah.
And these fucking bastards, man. I haven't done any of this shit. I don't even understand this shit. I mean, I do. You're explaining it. And
bro, man. Hey, Roosevelt banned people from owning gold back in the day. You know the government hates anyone.
I know that.
They do everything they can to make you not own this stuff. This is one of the ways. Because they're going to tax your ass 28%. That's a ripoff.
I know that. I just figure it out. I mean, I know people who are not paying taxes at all. So like, they're not in jail yet.
No, they got a game. They got the way to go. You know how it is. All right, all seeing guy. I'll end this stream. See you tomorrow at whatever time.
All right, GetCrack. Thanks for the information, man.
Yep. Good night, y'all. Good night, y'all.
Night, everybody.